his view could change depending on the employment report. This time next week, we'll be looking at that jobs report. What are you and the team expecting?
Yeah, so, we're looking for a number that's around 70,000, right? So that would be pretty close to the July outcome, but it would be a little bit higher than the 3-month average of 35,000, which has attracted a lot of attention. Of course, remember last month, those massive downward revisions to really the May and the June data, right? So the tricky thing here is that we know that a slowdown in net immigration has played a huge role in why these numbers are low. We know it's a combination of lower labor supply and lower labor demand. Both are playing a role, but we're not really sure which is the bigger factor. I mean, you could explain this slowdown just from slower population growth. Slower population growth probably has taken at least a point off of growth in the past year, both from a job side and also from a GDP perspective.
Ryan, when you look at the curve, when you look at the 10-year holding at 420 and then hear so many important, intelligent people talk about the dangers of attacking Fed independence, how do you reconcile those two things?
Well, I do think clearly this is a story that has evolved even in the last few weeks and months, and it is something that is very likely contributing to the steepness of the yield curve, right? So on the one hand, it's the Fed that has not really acted at all up until this point, and on the other hand, it's these concerns incrementally about what Fed policy will look like, not just for the rest of this year, but into next year.
Ryan, thanks so much for spending your Friday morning with us.
Thanks.
Ryan Wang of HSBC, reacting to the latest PCE inflationary data. Zachary Griffiths, head of US IG and macro strategy at Credit Sites, also joins us now. Zachary, I want to get into your bold call for September. Before we get there, just a quick reaction on what we saw in front of the data.
Yeah, thanks, Anne-Marie. It looks like the data is in line with consensus expectations. I think the uptick to 2.9% on the core PCE deflator is a little concerning. It highlights the inflation side of the concern for the Fed's dual mandate. But for us right now, it's all about the labor market in terms of the next adjustment to the policy rate.
When you're seeing these kind of inflation numbers, do you still expect the Fed to cut 50 basis points?
That's our base case. I think we probably need a little bit of help from the non-farm payrolls data next week. I think anything sub 60 will keep that 3-month moving average below 50,000 jobs. And to us, when you think about the Fed's reaction function a year ago and what we're seeing in the data now, it would justify a 50 basis point rate cut. And when we listen to what Fed policymakers are saying now, they are trying to dismiss the inflation concerns to some extent over the next several months, ruling them as transitory. We're a little shocked they're using transitory again at all, but you're hearing it, and what we're hearing from these policymakers we think sets up for a bigger move in the near term to cut off those risks that we unnecessarily weaken the labor market further.
By the way, in terms of the labor market, it's the supply side that I think is so interesting as we pursue mass deportations and stop any entry at the border. Even legal immigration now becoming more difficult. Doesn't that lead to some kind of upward wage pressure?
Typically, you'd think so, Matt, and I think what we're seeing is labor demand fall alongside labor supply, which for now is keeping things in a little bit better balance, but is not necessarily indicative of a very strong economy. When we talk to our analysts on the consumer side, they are saying that for a while now, the consumer has felt softer than some of this macro data would suggest. And so when we think about the balance of risks of these job gains falling so substantially, we do think it warrants an adjustment to the policy rate. And when we think about going, say, from 4.5% to 4%, I don't think that takes us to neutral. It certainly doesn't take us to accommodative territory. And so if I'm a Fed policymaker thinking about the balance of risk to where policy is today, I think they can take it to the downside, and the renewed focus on the labor market and what we're seeing in the data justify that kind of move.
What will the benefits be or drawbacks from the big, beautiful bill? Anne-Marie?
Hello, my name is Dr. Paul Cottrell, and we are live streaming on Rumble, YouTube, my website, the-studio-reykjavik.com, simulcasting on X Spaces. If you'd like to ask a question during the show or give me your opinion about what is being covered today, please ask for the mic on the X Spaces or just type it into the chat. This is an interactive show. I do these videos for free, so please help support the work that I do by going to my website, the-studio-reykjavik.com, and donate. You can donate through Stripe, PayPal, or buy me a coffee. You can be a paid member to my Patreon channel. I don't put stuff behind a paywall. It's through the patronage of individuals supporting the work by donating, by purchasing the products that I have on my store, by sharing the links, asking their social media to follow me, and making sure that they subscribe to all my channels. I have 4 channels on YouTube: Brighteon, Bitchute, and Rumble. So please help support the work by subscribing to all the channels, donating, being a paid member to Patreon, and better yet, get the great products that I offer that will help to slow down the aging process. I also have ebooks, and I have course material on immunology and pulmonology. These are a great way to learn about your body, and by getting the products and you pay attention to how to use them, you're going to be able to slow down the aging process. So thank you for joining. We are doing the live stream on August 29th. Markets have not opened up yet, so let's continue to listen into Bloomberg here. The big event today is the PCE data that came in, and it's within expectations.
Extending, I think you make a great point on just extending what had been existing law and avoiding a tax hike in terms of allowing the 2017 Tax Cuts and Jobs Act cuts to kind of roll off. And so to think of it as a big incremental tailwind is probably not the right way, especially when you consider the policy coming out of Washington as a whole.
Hey, you're head of USIG and macro strategy, so we can talk to you about more than just the economy here, Zach. And I wonder about spreads being so tight. Since I'm an equities guy, right, I typically anchor the Bloomberg Open Interest show from 9 a.m. to 11 a.m.
I call you a car guy, actually.
And I'm a car guy. But I can't get my head around why credit spreads are so tight here, considering the fact that we're seeing, for example, a big jump in bankruptcies, considering the fact that you have this worry about consumer softness, considering the fact that we're running up these massive debts, like leverage is out of control. So why are spreads so tight?
That's a great point, Matt. And I think we're a little surprised, to say the least, just how tight spreads have gotten and remain. And I think a point that you've been making throughout the show today is the technicals. There's a lot of cash in the system, and a lot of investors need to put that cash to work. And I think that's really been what's been driving spreads and asset prices across a broad swath of asset classes so far this year. We're a little shocked that with the amount of volatility we have in terms of policy setting, the way the Trump administration has gone about implementing some of its policies, and you think about Fed independence being called into question so directly. If you had lined up all of these factors for me coming into this year and where I think spreads would be, it'd be a lot wider. I don't think we'd have equities at all-time highs, and I certainly don't think the 10-year would be stuck at 420 to 425 with all of this coming out of Washington. So I think it all speaks to the strong technical in the market. It's impacting a variety of asset classes. And while we do expect that to shift over the next 12 months, for now, that seems to be in the driver's seat in terms of what's driving markets.
Zachary, thanks so much for your time this morning. Zachary Griffiths of Credit Sites. He's calling for a bold call, Matt. Fed cuts 50 in September, but all of this really hinges on what happens next week.
Yeah, absolutely. I mean, the labor numbers are so important, and unlike today's PCE number, that really could go either way. It's not going to be bang in line, not quite as easy to figure out.
Yeah, definitely not. Let's get you an update on stories we're watching elsewhere this morning. Lizzie Burden is
all right. So you have PCE within line. Prices increasing a little bit, 0.3% month over month. So there does seem to be a little bit of elevation in inflation above the 2% target. Most likely, some of the other economic data that came in last week is targeting around 3.1 to 3.3% inflation for year end. And the question is, okay, you have a little bit of inflation above the 2% target, most likely, quote, transitory, one-off, and then come back down. And I'm talking about, this is the kind of, I would say, the market consensus. And labor does it come with a strong number next week or a weak number? If it's a weak number, then it increases the probability of a 50 basis point cut by the Federal Reserve. If it's a strong number, then the question is it going to be a 25 basis point cut in September, or will they wait until October? I've been saying that they're going to probably wait until October. So if they wait until October, you may actually see equities go down. Now, there is a resistance level at 6,500 and a support level at 6,250. If it does go down, if the equities go down because of a very good job claim, or job report, labor report, then take that as an opportunity to buy equities. Now, if the job data comes in where there's some faltering of the economy, of the job market, then that increases the probability of the Fed lowering rates and the equities are going to go up. So there's this really decision that data has to be released next week, and that will make that move in the equities. This is part of the reason why you can see that the energy is starting to build up at this resistance point of 6,500. Waiting, what will the Fed do based on that labor data? So right now the futures market is at 6,501 for the S&P 500, and VIX is trading at 1450. I still have a target of 6,800 to 7,000 on the S&P 500. All right, with that, let's listen in to what's going on with AI and entry-level jobs.
Check out Base 44. I built this daily habit tracker that helps users log small wins.
Alphabet, Amazon, Meta, and Microsoft are all slashing middle management, part of a broader shift in how tech operates in the AI era. Mackenzie Sigalos joins us now with more. Mackenzie, this is so interesting just in terms of organizational structure for these tech companies and kind of what makes them more nimble in this AI race.
Hey, good morning, Leslie. So building on your reporting on this exact topic earlier in the week, I spoke to the team at Stanford that's tracking real-time payroll data from ADP, and they found that the jobs most exposed to AI, like coding and accounting, have seen a 13% drop in employment for workers under 25. And losing that bottom rung, they say, is a warning sign of disruption that's moving up the ladder. And we're already seeing that show up in big tech. CNBC's Jen Elias learned that Alphabet cut 35% of its small team managers in the past year, a shift that's echoed at Amazon, Meta, and Microsoft. Mark Zuckerberg has long pushed to cut bloat, and at Amazon, Andy Jassy said the corporate workforce will shrink as generative AI tools take hold. He also told employees there were too many pre-meetings for the pre-meetings and ordered a 15% boost in the ratio of individual contributors to managers. A Yale professor studying the corporate organizational behavior calls it the great flattening, where the goal is fewer layers between top execs and the people actually building product. Google's former HR chief under Eric Schmidt tells me that hyperscalers are likely cutting staff to fund chips, and they're very pricey AI engineers, but he also warns that gutting entry-level roles now will leave a hollowed-out pipeline and a shortage of managers later. Leslie?
Mackenzie, it's all really fascinating. There's a great book that I read earlier this year called The Geek Way by Andrew McAfee, and they talk about these principles that some of the most successful tech companies have employed in order to be successful in terms of their organizational structure, one of which is ownership and kind of giving employees more control over their daily lives, cutting out some of the middle management. And I just wonder, as we think about some of these companies and how they're shifting the way they think, they've gotten really big and successful because they've employed some of these principles. Do you feel like those are now changing as a result of the technology and just the ultimate pressure and CapEx spending and everything that's happening? It needs to be even more flat and nimble than kind of the structure that's gotten them the success so far.
So with Alphabet, it's almost been this boomerang effect where under Eric Schmidt, he introduced something called the Rule of Seven, where you couldn't be a manager unless you managed at least 7 people. And that was designed with a view to basically spread them out so they didn't become bureaucrats, spread them a little bit thin. So they aggressively strayed from that. And we're seeing that show up with the kind of cuts that they're making in the past year. But to your larger question, is it a shift in technology that's behind this rethinking of the org chart? And it really is a combination of factors. I mean, this began in 2023 during Mark Zuckerberg's year of really returning to efficiency, something that Wall Street has rewarded the stock for after a punishing stretch. And that was about expediting the decision-making process, really looking to compress that layer that separates the top executives who are making decisions from people who are actually building the tech. And now the people that they're hiring, spending hundreds of millions of dollars on these advanced AI engineers, they want to really connect them with those who are in a position to expedite product decisions in this expedited race. And so some of the decisions at Amazon, for example, looking to compress that ratio of managers to individual contributors, Morgan Stanley says that could lead to 14,000 cuts in management roles under Andy Jassy.
Yeah, I feel like one day it's going to flip and it's going to be the managers overseeing like 7 AI agents or AI bots, and there will be no just kind of player employees.
Why did no one tell you?
Investors will pay close attention to the PCE inflation report due at 8:30 a.m. Eastern Time this morning. Let's talk more about the markets with Kevin Mon, President and Chief Investment Officer at Hennian & Walsh Asset Management. Kevin, first of all, I just want to get your view on the market. This is last, obviously, trading day of August. You've studied this S&P rebound from the 5th worst start to the year to where we are today, back to record highs. Yep. How much longer do you think the rally can last?
Yeah, my major question is, where is all the volatility gone? Over the prior 20 weeks, the VIX has declined by 69%, the largest volatility crash on record. We've now had 20 record highs for the S&P 500 this year, following 57 record highs last year. We're trading at a current P of roughly 26, well above their 5 and 10-year averages. So how much longer can we run, and when will volatility return? I think investors should brace themselves for more short-term bouts of volatility, but that doesn't mean they should flee to the sideline, because there's still more growth opportunities ahead if you follow the money in terms of where all the spending is taking place. And where it's taking place, AI infrastructure and aerospace and defense.
So we, as I just mentioned, we get PCE later this morning. How much of the rally do you think are investors looking for different places to park their money that will outrun the potential for inflation, given all of the inflationary uncertainties, whether it pertains to immigration, tariffs, fiscal policy, where rates are headed? Yep. Is it, as opposed to other asset classes, they could park their money, yep. Stocks, especially growth themes that you mentioned, yep. They have more potential to outrun that.
It matters. And right now, the core PCE estimate is for 2.9% year over year. Remember, this is the Fed's preferred inflation gauge. I think if we're below 3.0, away we go with that first interest rate cut of 25 basis points in September. However, if we get a core PCE year over year number that's 3% or higher, the Fed may be on pause for yet another month. The market isn't expecting that. The market has already baked in a 25 basis point cut for September. So today's reading is very important.
Well, and another one for December. I mean, is that a risk then, or will it just be a 2% move on the moment that the inflation data comes out? If people start to price out cuts again?
I think it would create a short-term bout of volatility, but there's still so much cash sitting on the sidelines right now, waiting to chase these returns that we're seeing in the stock market. I still think they go 2 times this year, one in September, one in December. But of course, I don't have a vote yet. They're not calling me asking for my input. But I think there's 2 rate cuts this year and 2 rate cuts next year.
So just to put a fine point on it, you think today's PCE reading could essentially pour cold water on the September cut notion, regardless of what we see next week for the jobs report for August, which has been so focused. And I asked that against the backdrop of the speech in Jackson Hole by Fed Chair Jay Powell, where he talked much more about the conditions in the economy and the labor market relative to kind of price stability.
Yeah, I think it could pour some cold water, but I've been in the camp that they should have cut interest rates back in June, when they raised their forecast for unemployment to 4.5% this year, when they lowered their forecasted GDP growth to 1.4% this year. They believe GDP growth is going to stay below 2% for the next 2.5 years. If that's the case, they should have been more accommodative all the way back in June. But they're still concerned with the potential inflationary impact of tariffs, which is why they raised their inflation forecast to 3.1%. I think that's misguided. I think they're more concerned now about the labor market than they are with inflation. And that's why I still think that 25 basis point cut is in the cards for September, unless we get a really hot core PCE number this month.
On August 22nd, I told viewers
Greg, I kind of got caught in calling you Bear and Greg at the same time right there, because I've always kind of known you to be at least a little bearish. But you didn't correct me last time we talked. You said you haven't been bearish the last 2 times. You've been cautious. How are you viewing the markets right now, especially after NVIDIA earnings going into PCE, that could change the dovish stance that we saw from Jay Powell and maybe the possibility of rate cuts?
I don't think it matters, Frank. And let me contextualize that. There are, as you rightly note, I am normally fixated on the data, what the data dictates the Fed should do, what the data dictates the market position should be. And at this juncture, I think it's really hard to have a bearish posture. On the one hand, we see a Fed that by whatever mechanism is about to acquiesce to the president's wish. And we've seen that this administration is highly efficacious at, through whatever mechanism, getting its wishes, and in this case, it's lower rates. And if we know that lower rates are coming, it doesn't matter if it's September. It doesn't matter what PCE says. It doesn't matter what the jobs report says. It doesn't matter what CPI says. What we know will happen in a rate-lowering environment is that money supply will increase, and we know that that is a primary driver of equity values. And we know that earnings growth will increase, and that is already on a 3-quarter course for double-digit growth.
All right. By the way, your word for today is acquiescence. You put out the thesaurus on us. You mentioned acquiescing just a short time ago. I want to talk to you about the broadening of the market that we've seen this month, and we just pointed it out. Small caps far outperforming the broader market, up over 7%. We also saw healthcare rebound and consumer discretionary take leadership, at least this month when we're talking about different sectors. Going forward, especially after yesterday's very strong GDP report, do you see that broadening continue, or do you see investors piling into mega cap tech after NVIDIA? NVIDIA didn't benefit, but it seems like other AI names traded higher yesterday after that report.
Yeah, this is a rising tide that will lift all boats, Frank. This is a really big green light. You mentioned acquiescence, which is my word of the day. We see a Fed that's about to acquiesce to the administration's demands. Maybe that's not September, by the way. I'd probably bet against that. But again, that doesn't matter whether it's September or in forthcoming months. But we also will see a market that will acquiesce to what the Fed is doing. And so you know that we've long held the mantra that you don't fight the Fed, and it's for those 2 reasons which I've articulated, which is money supply is going to increase and earnings growth will be accelerated.
All right, so we got to get to your pick, but just speaking of acquiescence, I was talking to Joe Mazzola, head of trading at Schwab. He's looking at financials, 80% of those stocks above their 50-day, consumer discretionary 75%. So we got to get your pick. Do you want to go in one of those sectors that seem to be rising, or stick with tech?
So, as you know, I like to, whether bearish or bullish, I like to park in sectors that have superior earnings growth. And tech over the last few years, and probably going forward, many of the AI data center names, etc., will put up 30% plus growth. But one of the other sectors, I've spoken about is the GLP-1 sector, Frank. And right now it's had a pullback because we haven't seen the inflection point. But what is widely predicted is that this is going to be a $150, $200 billion peak year market. Metsera's at the head of the evolution of that market.
Dropped a little bit, 0.2% on a year-over-year basis, still 2.6%. But the issue is for the Fed, we're not moving in the right direction. So if you do want to cut rates, as a certain Fed governor said last night, you're probably going to need to have a little bit better numbers than this. Now they're going to they won't have another PCE report before the next Fed meeting, but they do get a CPI report on September 11th. The good news side of this that is good news for the economy, but not necessarily good news if you want to cut rates as well, is personal spending was strong in July, up 0.5%, much of that automobiles, but that pushed up goods spending more than expected. Personal income up 0.4 on the month, and as part of that, wages and salaries jumped to a 0.6 increase from a 1/10 increase. So consumers have more money to spend at this point, it looks like, and every indication is, guys, that they have been spending it.
So for Chris Waller, 3 is the same as 2, at least for now, because he says he's back on team transitory. Are we expecting everybody to be down for a rate cut? And could we even go 50 basis points September 17th?
Well, this data suggests that 50 would be kind of out of the ballpark. Now, Waller is saying that the inflation numbers he's looking at are these numbers, but you take out the tariff impacts because he believes those are one-time increases. So that puts it closer to 2, he says. Now, the rest of the Fed doesn't necessarily do that. We've heard from Eric Schmidt, the Kansas City Fed president, who says, I absolutely won't do any PCE X anything because that's not the experience that people have. And what they're worried about is whether or not inflation expectations rise, which is my tease ahead to the 10 a.m. University of Michigan numbers, which everybody will be watching today. So that rules out 50 probably. The question is, what do we get from the jobs report? And Waller made an interesting point there that he's seeing deterioration in the labor market in the private ADP data that the Fed gets each month, each week. So they are tracking ADP's numbers as they come in, and he suggested in a footnote to his speech last night that things might not be as good as even we think for the August numbers.
All right. Mike McKee, thanks very much. Michael McKee there, our international policy and economics correspondent. Now, Fed Governor Lisa Cook is due in court in about an hour. She filed a motion for a temporary restraining order against President Trump, Fed Chair Powell, and the Board of Governors. The order would allow her to continue working as she fights the president's attempt to oust her from her position for cause. Trump says the court, and I believe he's referring to the Supreme one, should defer to him on the for cause debate. Bloomberg's Washington correspondent Tyler Kendall joins us from outside the courthouse where this initial hearing is going to take place. Tyler, what do we expect?
Yeah, hey Matt. Well, at 10 a.m. Eastern, this federal judge is going to start to dig into this case brought by Fed Governor Lisa Cook against President Trump, alleging that he violated federal law in his attempts to oust her. And actually, breaking just moments ago, we got our first response from President Trump in a court filing to Lisa Cook seeking this temporary restraining order, which would reinstate her on a temporary basis. He doubles down that determining cause is at the discretion of the president, and he goes on to suggest that he gave Lisa Cook the ability to respond, saying that he publicized his referral and made clear he viewed the allegations as, quote, potentially criminal conduct as grounds for termination, yet Dr. Cook offered no defense to the charges, not in public or in private. Of course, one of the issues at hand here is that Lisa Cook says that she was not given due process, that she was fired without being able to defend these allegations against her. That's going to be one of the key issues as this court case plays out. The other, of course, as we've been talking about all day here on Bloomberg, is what determines cause. This idea that the president can only remove a Federal Reserve official for cause. Lisa Cook's lawyer say that this does not rise to cause and that the allegations are not true. But in a court filing yesterday, we got perhaps a preview of their defense, saying that if there were any errors on those mortgage applications, they were likely clerical errors, and that Lisa Cook did not have any intent to deceive anyone when it came to this, and that no harm.
Lisa Cook seems to have done mortgage fraud. Highly probable that she did it on purpose. All right. There's additional information that came out today. Now, the information that came out last week was she applied for a mortgage in Michigan, stated it was her primary residence, and 2 weeks later in another state, maybe it was Florida or South Carolina, I'm not sure, Georgia, I'm not sure which state, but she filed for 2 weeks later filed another mortgage saying that that's her primary residence. She had these two mortgages saying that she had these two primary residence. Then, sometime later, I'm not sure how many months later or weeks later, she states that she filed for a mortgage in Massachusetts, and that would be her second home. All right, and then ends up renting it out. So there is some serious fraud here that's going on with her. So it's not just the first stuff about, oh, this is a clerical error. Then what about this other information about Massachusetts? This is another example of she is elevated to a high position, even though all these things that she did were before she was on the board. She was elevated to a high position. She thinks she's above the law, and that she shouldn't be accountable for anything. And where's the ethics? Where's the morality of this? When you're on a board where it determines interest rates. So she should step down just for the sake of the integrity of the board of governors. But she doesn't have morality. So that's a problem with her character. There's a problem with her character of the way she did the mortgage fraud. There's a problem with her character that it's all about her and that she thinks she's above the law. She doesn't care about the integrity of the federal board. So this is a huge issue. There's a morality issue with this. This elevation of individuals that aren't really that qualified, and they take those positions. They don't hold them in high esteem, and they have a morality issue. There's a lack of moral fiber in their character. Serious problem. So I think that she should be removed, forcefully removed, and that if a court system decides to reinstate her, then fine. But there needs to be an interim board member taking her place while this is proceeding in the courts. That's my take on it. Now, in terms of the PCE, PCE is personal consumption expenditures. It has a lot of data within it, but there's a headline number that's really important. It's a way to determine how consumers are spending and what the inflation is. This is a data set that the Federal Reserve prefers to use to make its decision. So you have what's happening in the labor market and what's happening with inflation. There are other data sets like PCI, right, or CPI, where they give you a little bit more potential information. But the Federal Reserve prefers to use PCE. All right, now CPI, the Consumer Price Index, that was stating that annualized inflation would be around 3.1. Now, CPI and PPI, the PPI numbers that came out, the purchasers numbers, so the manufacturers, they were saying that annualized would be approximately, I think it was 3.3. All right, so both of them are above 3, and the target that the Federal Reserve prefers to be at is at 2, plus or minus some amount, like 0.5. So, so if it's at 2.5, they probably would say that you're within the 2 range. There's others in the market that are saying, well, the 2% really needs to be at 3% as a target. I'm totally against that. I think it needs to be at 2%. We've had inflation that's been running above target for many years. And so prices have accumulated over year. And to get it back down to a 2% average, you really need to have it below 2% to really get some of this inflation out of the system. All right. So the economy grows and inflation stays below the 2%. That would be a perfect world. Now, with the data that came in with the PCE, which is the preferred measure for the Federal Reserve, it's coming in below 3% for annualized inflation year over year. So what this suggests is that since it's below 3 and it's a little bit above the 2.5, depending on which number you want to look at, it's like 2.9 or 2.6. If labor is strong next week, the labor data is strong next week, then the Federal Reserve does have a little bit of room to lower rates because of the PCE data. But it's suggesting maybe they should wait one more month. This is why I keep on saying that it's possible that they do their quarter-point rate cut in October. If the labor goes down, if the labor data is showing some sort of deterioration, then the Federal Reserve is probably going to cut. Now, if it's showing a lot of deterioration, which it probably won't, it might even cut 50 basis points or signal that they'll do a 25 basis point in September and then another 25 basis point cut in October. What probably will happen is it'll probably be a healthy number. And so the Federal Reserve has to make a decision. You have a strong labor market and you have slightly above the 2%. You have above 2% target for inflation based on the PCE data, and above 3% comparing CPI or PPI data. So if they lower rates and inflation is sticky, all right, the inflation rate is sticky and it's not transient, then they will make it worse. If it's a one-off because of tariffs, then doing a quarter-point move probably isn't going to do much in terms of setting a bout of inflation. But it would be ideal if PCE was closer to like 2.2, 2.3 instead of 2.9 or 2.6, depending on the headline number that you want to look at. So that's the conundrum that the Federal Reserve is at. Please go to my store, the-studio-reykjavik.com, and help support the work that I do by getting the great products that I offer. If you take these products, you're going to notice that your body is performing better and it's healing and you're slowing down the aging process. You're getting your body into homeostasis, which is really important because a lot of people, their body isn't working properly. But if you take the proper supplementation, do the proper diet and exercise, and holistic approach, you can slow down the aging process. So please go to my store and get the very high quality structural nanosilver soaps that I have. I have charcoal tea tree, lemongrass, peppermint, and lavender soaps. Very high quality structural nanosilver soaps. Get a few bars for your household. Use discount 5, you get $5 off any order. I also have supplements that are dual purpose, such as olive leaf extract. Olive leaf extract helps with your immune system and your cardiovascular system. How does it work? It works by bringing down inflammation. Now, when you bring down inflammation at the vascular level, you're reducing plaque formation. Also, bringing down inflammation at the systemic level, you're helping your immune system because chronic inflammation will actually be immunosuppressive. So you want to bring down that inflammation. So by bringing down inflammation, you're slowing down the aging process, you're boosting up your immune system, you're reducing plaque buildup. Also, olive leaf extract helps with your lipid profile, helps to bring down LDL levels and increase your HDL levels. When you bring down LDL levels, you're reducing the chances of having oxidized LDL. When you reduce the chances of oxidized LDL, you have less plaque buildup. So please go to my store, the-studio-reykjavik.com, and get the olive leaf extract. Very high quality ingredients and supplements that I offer on my store. Use discount 5. You get $5 off any order. If you spend $100 or more, you get a free gift until supplies last.
Going into this weekend, when perhaps there's still a few more question marks, a bit of risk aversion going into.
By the way, do people need to somehow buy new computers to use ChatGPT? Mine works fine on my old computer.
Do you not have an AI PC?
Yeah, what is an AI PC? Like, what difference?
It's going to make you just supersonic, Matt, if you're not already. Well, look, this is where I think the compare and contrast is interesting. HP, the day before, said PC sales were much stronger than the market had anticipated. They're actually seeing about 25% of that demand being AI PCs, particularly in the commercial area. So why is Dell not seeing the same ripple effect? So there's a bit of worry about market share here and general enthusiasm around Dell's products vis-a-vis HP. So I think that was why also people are look, why is this part of the business weaker?
Did you know, okay, so Supersonic is a song by Oasis from 1994.
Caroline Hyde is a fan of Oasis.
Yes, you're seeing him on Monday. Don't judge me on Tuesday.
I only know Wonderwall, so in any case, let's talk a little bit more about profit margins, getting us back on track here, because you take a look at the transcript of the conference call. This is something that the COO had to address, really getting questions on the profitability of the AI server business. So there's a lot of question marks here, beyond just the sales numbers.
Or the champagne supernova. How many records should we get it? No, Marvell, I think, I've got a great quote coming from Jordan Klein. We have him on the show often. He's over at Mizuho. He said, Marvell is already hated and having some real company-specific issues is basically the best new short idea. This is basically his view that this is a company that cannot fend off competition coming from Taiwanese competitors, but from Broadcom as well. This was a company that was basically making the custom chips for Amazon, for Microsoft, the companies that are spending vast quantities, $400 billion worth in capital expenditure, trying to build their own specific chips so they're not so reliant on NVIDIA. How then are we seeing a flatlining in their AI business for the next quarter? This lumpiness that they're seeing is not music to the investor base's ears. And it's notable on both these stocks, so Dell and Marvell, 0 sell ratings from the analyst community. Most still say buy the stock. It's just the hedge funds in particular, the ones that have gone in around the trade, have piled back out when you're seeing any sign of weakness.
Yeah, a lot of neutrals, right? Bank America says it's a neutral, and they downgraded it.
A lot of price targets came down as well on the day.
Yeah, exactly. A lot of revenue reductions. All right, Caroline, we look forward to Bloomberg Tech. Yeah, I'm going to join you on Bloomberg Tech. Caroline Hyde.
6 hours. We need 6 hours on that on TV.
That all-important program. Some of the other movers on our radar this morning outside of tech, Ulta raised its full-year outlook after reporting second quarter results that topped expectations. And I was actually just talking with Dana Telsey on Bloomberg Surveillance, and she's very impressed. This is one of the retailers that she likes above all others.
Yeah, it's one of those retailers that, again, it's beauty, and I feel like that's been a little bit more resilient than maybe some of the other categories that fall under the retail category. Let's talk
We were talking about a $160 lipstick from Louis Vuitton.
Yeah, I believe it. Not what I would.
But would you buy it?
No, absolutely not. Anyway, let's talk about a firm. Earnings cleared a high bar, and analysts from TD Cowen, RBC, Morgan Stanley, all boosting their price targets. That is helping to boost the stock, currently up about 16.5% pre-market.
Woof.
Woof.
Petco, what a great ticker. Petco raised its earnings targets for the year as the company's turnaround starts showing signs of progress, and wow, 20% gain in the pre-market.
Yeah, huge gain in Wolf. One of my favorite tickers, other than Hog, for Harley Davidson.
I love Hog as well. I'm getting ready for a pretty sweet trip. I'm going to ride my Fat Bob out to Pawtucket, Rhode Island.
All right, well, wear your helmet. Coming up, Sarah Hunt of Alpine Saxon Woods walks us through seasonal turbulence ahead of the high-stakes September Fed meeting. This is Open Interest.
No, there's definitely, what I'm noticing with the markets is that there's definitely energy building up at that resistance level of 6,500 for the S&P 500. And it coincides with what's going on with the Federal Reserve. And that move that they make either in September or October is going to be a big move. All right. It's going to really set in motion for a market rally for the S&P 500. So the S&P 500 is trading at the futures market's at 6,500. It's down about 16 points. Markets will be opening up in about 7 minutes or so. Let's take a look at what's going on at CNBC here. This is Rick Santelli talking about PCE.
Navon is the business travel platform where employees book their own trips. You simply define policies, set your budget, and track everything.
Want to get over to the PCE report, which is going to be out in just seconds. Want to get straight over to Rick Santelli standing by at the CME. Rick.
Yes, we are awaiting the July read on income and spending and all the Fed's favorite inflation metrics, and they are populating on the wire as we speak. Personal income up exactly as expected, up 0.4. Up 0.4 would be the best since up 0.8 in April. Up 0.5% in spending, very solid and very much as expected. Up 0.5%, best since March when it was up 0.7. If we look at real spending accounting for inflation, once again, nice strong number, exactly as expected, up 0.3. This follows up 0.1, and it is the best since March of this year. If we look at the PCE on a month-over-month basis, exactly as expected, up 0.2. Up 0.2 equals where we were in May. To find a lower number, you're going back towards March when it was 0. So we are making definite progress there with respect to the PCE on a month-over-month. If we take a year-over-year perspective, 2.6. Left and right, it's exactly as in the rearview mirror. It's exactly as expected. If we look at
all right, so this is the important piece here. The PCE coming in at 2.6. This is a number that the Federal Reserve prefers to look at relative to their 2% target. All right, so it usually the 2% target has a plus or minus range to it, so it's getting very close to that. So. The probability that they lower rates in September a quarter point is pretty high, probably 80%.
Over month on a core basis, up 0.3. Once again, exactly as expected, exactly as the rear view mirror. And finally, what I would consider the most important number on this 7 variables within this income and spending, that would be the core PCE year over year. Comes in at 2.9 as expected, but this is the only number on the inflation front that's a little warmer than it was last month. It was 2.8, now at 2.9. 2.9 would be in line with the 2.94 that we had in February, or the 2.97 we had in March of last year. Now let's look at the trade balance, shall we? We're expecting 90.2 billion with a negative. That's a red, a minus sign.
All right, now let's dive into this a little bit. Okay, so you have the headline PCE at 2.6% year over year, and the core PCE at 2.9. Now, core means that you're excluding energy and food. So that basically means that the lowering of energy has helped the overall PCE headline number. That's probably the main driver. Food prices probably in some categories have gone down. In other categories, especially meats, they've gone up. So the primary reason why the 2.6 headline PCE number is happening is because of lower energy costs. So if we exclude the energy and food out, you have core, and core is at 2.9, slightly higher than last data set. Now, if you look at it just at the core level and not the benefits from lowering energy costs, it's lowering the chances of the Fed cutting rates if there is a strong labor market. So this data, the core PCE, shifts it the probability of a quarter point cut in October instead of September. But if you look at the headline number, that's including the energy costs going down and having a headline number of 2.6%, then you're within target and therefore a high probability of having a quarter point. And this is the reason why this is why there's this energy that's building up in the system, in the equity system, just waiting. What will the Fed do? What will the Fed do? What will the Fed do? If the Fed waits, the equities will start to sell off. If the Fed does the quarter point cut, then the equities will go up.
Expected minus 103 billion, and that would comp to the biggest deficit ever in March, and that was minus 161 billion, and that was the biggest since record keeping in 1989. So we are moving the wrong way there. Wholesale inventories up 0.2. That's a July preliminary number. Retail inventories, a July number, up 0.2. How did all this get digested by the marketplace? Well, prior to the release of the numbers, a 2-year was at 364. It's now at 363. It closed at 370 last Friday. If we look at 10-year, it's currently at 421. It was at 422. 421 is exactly unchanged versus yesterday's late cash market close. However, we did close at 426 last Friday. So we are lower in yields, not a lot, but about a handful as we sit right now with last Friday's close. We're turning a bit higher. Yesterday's low yield in 10s was right around 420. We held that today. That's very critical. And if you're a technician out there, watch 4.25 in deference to the close. Gang at the desk, back to you.
All right. The market has opened up, so let's take a look at what's going on. The S&P 500 is trading at 6,487. VIX is at 1455. Euro is trading at 116. Oil is trading at 64.42. BITO is trading at 19.93. Bitcoin is trading at 110,000, roughly. Natural gas is trading at 2.977. I would say that if equities continue to go down, Bitcoin will continue to go down. If equities go up, then most likely Bitcoin will go up. Now, Boyle is an ETF longing natural gas. That's trading at 29.52. So let's talk about resistance levels. So for natural gas, the resistance level right now is at 3. Support level is at 2.814. So if natural gas goes above 3, then you're going to start seeing Boyle start to appreciate. Contracts are going to start moving over for the fall and the winter with probably contango. So prices probably will elevate for natural gas. So I suspect that as we're moving into the fall season, you're going to start seeing about 3.4, 3.5 for natural gas. Now for equities, like I said, 6,500 is a resistance level. It's going to be a major resistance level until the Federal Reserve makes their decision, and a support level of 6,250. Now, we have a weakening of, or I wouldn't say weakening, but we have a stabilized Japanese yen at 147. If there's financial stress in the market, and it's something that we have to pay attention to because of England and France, and China. If there's financial stress in the market, we're going to start seeing the Japanese yen start to appreciate. That means if it gets closer to 140 or breaks 140, goes below, then you're going to start seeing VIX going up. You're going to start seeing equities selling off. So just pay attention to not just what the Federal Reserve is going to be doing, but also what's happening in France and England and China. All right, so with that, that's the resistance levels for the S&P 500 and the support level. BITO is trading at 1992. So the next the resistance level for BITO is 2149. Support level is going to be around 19. And it all depends on what's going on with Bitcoin. When it goes up, there's a lot of volatility with Bitcoin. It's going up. It doesn't want to stay at the 120. It's kind of going down, and it might even break. It may even break 110 today. Oil is trading at 64.43. There's a resistance level at 65, and there's a support level at 60. So it's a little bit on the high end of the trading range, so it's probably going to come back down. And TYD is a ETF trading the belly of the Treasury curve. 10-year Treasury yield is trading at 4.234, and TYD is trading at 25.60. So the next resistance level for TYD is 25.87, support level at 25.02. If the Federal Reserve lowers rates, most likely the belly of the curve price will go up, all right, for treasuries. That means the yields will go down, all right? So the yield curve, the actual yield curve, will go down, will shift down. The yield price curve will go up, all right? So it's inversely related. So if the Federal Reserve lowers rates, most likely TYD will go up. And we'll see yields go down for the 10-year. Okay, so with that, let's listen in to Bloomberg talking about the Cook hearing.
Tell us a little bit more about those places. I mean, does it cut across industries here? What does the Venn diagram look like?
Well, there is a Venn diagram between the industrials, the energy, and the AI space, right? Because we still have to build out a lot of that infrastructure, and there's a lot of talk about the fact that we're short on power and how that's going to impact going forward. So the companies that are involved in those sort of spaces tend to be companies that are getting favorable investor sentiment right now. But as well, you're also seeing companies in the U.S. The housing market is weak, so that side of the area we want to stay away from. But the consumer is doing fairly well, and some of that spending is coming through. So there are places where you can really see that cash come through, and that's really something that we focus on, like I said, both dividends and buybacks.
What are you looking for? I mean, next week the jobs number is so important, right? To the outlook for the economy, to the Fed, to the equity indexes. What are you looking for in the jobs number?
That's a tough one. Consensus is down around, I think, 80,000. I think that you've seen so many revisions and there are so many puts and takes right now in the employment number. I'm not sure I can widely disagree with what consensus is, but it would not be surprising to see a number that was far off one way or the other, because we have had a lot of surprises in the labor market. So I think that that's still also a work in progress. There are a lot of different factors that are going on between immigration, AI, a lot of things that are happening that are hard to separate out each individual component. So we just have to keep looking at data and seeing what we can ascertain from that data. So I think that's something that is, it's going to be a big deal. That's why I said labor market and inflation are going to be the biggest movers of markets for the next 3 weeks before Fed.
Absolutely. Well, not too much longer that we have to wait to get those jobs report numbers next Friday. Sarah, have a great long weekend when you get there. That is Alpine Saxon Woods Chief Market Strategist, Sarah Hunt. Meanwhile, we're just about 7 minutes into this trading day, this Friday trading day, ahead of a long weekend. And of course, the final trading day of August, and it doesn't look that good. The S&P 500 off by about 0.3% right now. We know that we hit record highs yesterday, so it's hard to complain in this market. We might get some funkiness ahead of the close, that month-end window dressing, but let's take a look at the individual components right now. Autodesk is your biggest gainer in the S&P 500 right now on a points basis. I have to imagine that doesn't happen all that often, but the software company reported results. They were good. They also raised some guidance as well. That certainly helps. ExxonMobil and then Berkshire are some of your bigger gainers as well. But then you take a look at the downside, and this is the problem. NVIDIA off by more than 2% right now. We've been talking about how yesterday NVIDIA was down, the S&P 500 was higher, but take a look at the rest of the list. Broadcom, Meta, Microsoft. You add it all together, that is weighing on this index at a sector level as well. So let's take a look at that now. You can see that actually there's more green than red, but you have energy at the top. It's just not big enough to drag us that much higher. Healthcare too, relatively small weightings in the benchmark. Then you go down the list. This is the problem. Industrials off by 0.3%, and then big tech, the tech sector, off by 0.9% right now, Matt Miller, and that is why the S&P 500 is lower at this exact moment.
Yeah, absolutely. And of course, we hit an all-time high yesterday, so the trend is still sort of up and to the right. Coming up, Celsius is getting a jolt from Pepsi. We'll give you the details on that deal next. This is Bloomberg Open Interest.
All right, we're going to go to Jeremy Hunt talking on Quest Means Business. But before we do that, please go to my store, the-studio-reykjavik.com, and get the vitamin C and magnesium. Vitamin C and magnesium helps you with your skin, your immune system, and helps with your brain function. Magnesium is super important for brain function. Magnesium and zinc, awesome supplement. Boosts up that immune system and helps with brain function. You can take them together. You can take them separately, but it's better to take them together. Please go to my store, the-studio-reykjavik.com. Use discount 5, you get $5 off any order. If you spend $100 or more, you get a free gift until supplies last.
There are new signs that the UK is not yet won its fight against inflation. Wholesale and factory gate inflation rose to a 2-year high. The latest numbers show it reached 1.9% from a year before. One more concern for the Bank of England and its Governor Andrew Bailey. He told central bankers last weekend that the British economy is facing an acute challenge: weak growth and low workforce participation. And he said the emphasis needs to be on productivity as the population ages and more working age Britons on part of the job market. So Jeremy Hunt spent 2 years steering the British economy as Chancellor of the Exchequer. Before that, he was Theresa May's Foreign Secretary. But this is the interesting bit. He poses the question, can we be great again? And why a dangerous world needs Britain, saying the UK can best reclaim its global influence through economic renewal and growth. So Jeremy's an MP in Parliament. What's gone wrong?
Well, I think the same things have gone wrong with us as with many other Western countries. But put in a nutshell, we've lost our confidence. And if you look at the rise and fall of great civilizations through history, a lot of it boils down to confidence. And in this day and age, confidence boils down to your economic strength. Why does everyone think China is growing in power? It's because of the Chinese economy. So my argument in this book is actually the UK is in a much stronger position than it thinks. The Brits are the best people in the world at doing themselves down. But if you look at the experts, we're the 6th largest economy now. And in 15 years' time, we'll still be the 6th largest economy.
So that's all sounds great. But what does it mean in practical terms of policies that have to be put into place?
Well, what I say in the book, and frankly, Richard, your news coverage this evening demonstrates just what a dangerous world it is, whether domestically in the US with the tragedy in Minnesota or what's happening in Israel or Ukraine. And what I say is, with a very dangerous world, it's a big mistake for countries with influence to underestimate that influence. Not just Britain, I'd say the same to Australians or Canadians or even Americans. I remember Henry Kissinger saying to me that his biggest worry about America was America losing its self-confidence.
Well, but it hasn't now. MAGA has come in, which is a version of that, whether we like it or whether you like or not, the way it's been put into executed. MAGA is bringing back the confidence, make America great again. Can we be great again? Do we need and you'll launch yourself out of your chair with this, do we need a Donald Trump, which arguably might be Nigel Farage?
Well, I think the answer to that question is that there are lots of things that you and I would disagree with Trump on, whether it's what he said about Zelensky and Ukraine or tariffs. I profoundly disagree with that. But he is at least determined to turn things around. And that is a good thing. And I think that those of us who say, well, other policies would be more appropriate in this or that situation, we need to recognize the strength of that movement and his determination to bring that confidence into America. So it doesn't have to be the same policies as Donald Trump. But, Britain, if you look at the surveys as to who has, let's just take Europe, for example. We have the biggest military in Europe. We have the biggest technology sector. We have the biggest university sector. We have more soft power, more hard power than any other European country. Now, lots of problems, lots of things we need to fix. But, let's not lose our mojo. And that's the argument I make in this book.
Right, but you further in the book, you have this letter to Sir Keir Starmer, in which you basically say, well, you should, you give him sort of the idea, get on with it. If you do. You want to make Britain a force for good, a smart approach to politics. This current Prime Minister has a thumping, huge majority, the like of which most Prime Ministers would salivate for, and yet the government's in a mess.
Yes, and, the reason is because he does not realise just how much power and influence he has sitting in Downing Street. I mean, I've been in Downing Street with governments that didn't have a majority at all. And he has this enormous majority. He didn't need to back down on welfare reform. And as a result, he's going to have to put taxes up. It's going to make him even more unpopular. I think the biggest single thing that he needs to sort out, and there's a whole chapter on this in the book, is the illegal migration crisis that we face in this country. And, people say, oh, Labour's hopeless at dealing with this. Now, I'm not a Labour supporter, it goes without saying. But Keir Starmer is a human rights lawyer. There's literally no one better suited to ripping up and rewriting the European Convention on Human Rights, which was brilliant for its time in the 1950s, but rapidly has run out of steam and needs rewriting.
Do you think there is a deficit of leadership at the European level? And I ask this because I look at sort of von der Leyen and I look at Costas and I think to myself, is that sort of the best we've got running Europe? Should Europe be playing? I mean, they rolled over on tariffs. The UK was in a slightly different area. They got a great deal early on, but the rest all just rolled over.
They had to.
They
had to because Donald Trump is defending Europe. And they knew that if they had a big trade war with the US, the ultimate card he could play is he could say, I'm going to stop defending Europe.
Right.
So, that's why they agreed pretty rapidly to increase defence spending.
You're still in the House, and you still harbour for the top jobs.
I think that ship has truly sailed. But I'm enjoying writing fabulous books, and I think we should be a bit more optimistic. We've got a great country.
Thank you. Please come back again. And thank you very much, Jerry. Good to see you. Thank you.
Please go to my store, the-studio-reykjavik.com, and get the probiotic and the complete vitamin. These are the foundational pieces of the healthcare protocol. Now, with a good foundation, with a good probiotic and multivitamin, you're going to be able to build off of it. Now, with the complete multivitamin, you get the multivitamins that you need for proper enzymatic activity. Multivitamins are cofactors for enzymatic activity. They attach to the enzyme and change the conformation to allow them to perform better. So it's really important to take. So please go to my store and get the complete multivitamin. It has vitamin A and D and the B vitamins, folate, manganese, lots of vitamins that you need as the foundation to build off of. All right? It's easy to digest. Take it every day. Make sure you drink it with filtered water. I also have probiotics in veggie cap and in powder. Take the probiotics. That's going to help with the gut biome. It's going to help to improve your digestion. You'll be able to absorb your nutrients better. It'll bring down inflammation. It'll help with your immune system. It will improve the mucosal lining. It'll improve the communication between your gut and your liver. Your metabolism will improve. It'll improve the communication between your gut and your brain. You'll be able to sleep better. You'll be able to concentrate. You'll get rid of that brain fog. And by sleeping properly, you're going to heal your body. You're going to detoxify your central nervous system. You're going to consolidate memory. So you get a lot of benefits by taking a probiotic. You also will notice that your skin improves. So please go to my store, the-studio-reykjavik.com, and get the probiotics that I offer and the multivitamin as foundational pieces to the healthcare protocol. Super important. So please go to my store, the-studio-reykjavik.com. Use discount 5, you get $5 off any order. If you spend $100 or more, you get a free gift until supplies last.
Summer for deals. How does that set us up going into the autumn, maybe a little bit more active time?
So this is probably the most nerve-wracking weekend for any deals reporter or like M&A watcher. Labor Day weekend, the 3-day weekend tends to be the most intense M&A weekend. A lot of expectation for what could come on Tuesday. Like you said, this summer has been very active. We're seeing deals across like the energy sector, the consumer sector. There's been large company like the Kraft Heinz that have announced strategic review. You know, there are a lot that is happening that you wouldn't have expected like 8 months ago or like last year, just because of the change of administration and how people expect potentially there could be, you know, interest rate coming down. So all of that is like creating a very good M&A market. And for us, everybody, every banker, all of them very optimistic about the rest of the year. We'll see whether that comes true, but Tuesday morning would be a very good indicator.
So for you, for the deals team, like every year, Labor Day weekend is
who gets the short straw? Like who works this weekend?
Wow.
The bankers and our M&A reporters.
For me and Katie, it's a Four Loco Friday.
Yeah, we're going to be at the disco.
Disco, yeah.
Mixing vodka and energy drinks. Crystal, great reporting as always. Really appreciate your time. That is Bloomberg's Crystal C. Now coming up, there's now more ETFs in the U.S. than there are stocks.
That bears repeating.
That bears repeating. We're going to repeat it a lot coming up next. This is Open Interest.
Join us for reaction to the data and this fast-moving story. Former Kansas City Fed President Tom Hoenig, he's a distinguished senior fellow with the Mercatus Center at George Mason University. I think he thought he was going to talk about this data first, but I actually want to ask you just about this case since we're on the topic. Tom, what is your reaction? What would you like to see this court do this morning?
Well, good question. I would like to see them simply try and sort this out in the sense of does the president have the authority to fire and have her step down as she sues, as Steve and you have outlined. I think she deserves her day in court like anyone does, and I think let the court decide. That's what the Fed's saying, and that's what I would join them in saying at this point, given the unclarity of this case. It's really difficult to know a clerical error or something else. So I don't know.
It's beyond a clerical error because of the issue that she has with a third mortgage stating that it wasn't a rental property, that it was her second residence. It's not clerical. She did it on purpose. Just use some common sense. But not just that, she doesn't have the moral fiber to be on the board. That's the big issue here. She did things that she shouldn't have done that would have disqualified her from even being on the board. So the due diligence was terrible at the Federal Reserve. So you dig into why is this all happening? Poor due diligence. She's put in a position that she's really not that qualified for. She thinks that she's above the law and that now she's using the legal system to hold on to that power that she should have never had. But not just that, she's willing to bring down the integrity of the federal board of governors, knowing that she broke the law. She doesn't have a moral compass. Do we really want someone making decisions that doesn't have a moral compass? It's too easy to just say, well, I think that she should be on the board and we'll just wait until the court system. It's too easy to say that. It's a little harder to say, you know what? You should be squeaky clean to be on the federal board of governors.
And I think let the court decide if that's what the Fed's saying, and that's what I would join
It's
in,
too easy.
in saying at this point.
It's too easy.
Even
It's so
they-
parochial of an answer. What about the actual integrity of the board? What about the moral fiber that is needed to make these types of decisions? Does she have that moral fiber? Does she have even any fiber? Because she looks like she's full of shit.
The clarity of this case is really difficult to know. A clerical error or something else. So I don't know beyond that.
Tom, one follow-up just related to this, which is obviously there's the courts and then there's the court of public opinion. There have been members of the Fed that have ultimately stepped down, irrespective of what kind of authority the president has or doesn't have to fire somebody. But there have been people who have stepped down in part because of what might be described as moral problems or other problems, other things that have happened. And my question is, circumstance, whether you think, putting aside what authority the president has, whether she should be more publicly either defending herself or not defending herself, and what role, therefore, the Fed has in all of this.
Well, I mean, I think she has publicly defended herself. Whether it's sufficient to someone's standard, I can't guess at, but she has publicly defended herself. And I think, others, you're right, others have stepped down. The pressure has grown on them to step down, and they did so. And so you mentioned public opinion. I don't know where the public stands on this, frankly. And it's really, it really has to just play out. She may decide, if this continues, she may, like the others, decide to step down, or depending on how the hearing goes this morning and what the court decides, that may actually determine it for her. And I think we just have to wait and see. I wish I had a better answer for you, but it's up in the air, and that's what everyone is saying, and I would agree with that.
Tom, I want to bring it back to the data, and I'm going to beseech you to help me here, because I got all kinds of different things happening. I got a New York Fed president saying the data is solid. We just had an analyst on who made a very smart observation that inflation is at 3%, a percentage point above target, and the Fed is cutting. And I got a Fed governor who is saying that the labor market is so weak it's about to turn negative based on his extrapolation of revisions that are yet to come and yet to be published and won't even concern the current thing. How do you come down, Tom, on all of this? Are you a guy who says, look, I have to cut on the come, so to speak, if you're playing craps, and say, look, if the labor market is going to have to guard against it? Or do you look plainly at your inflation target, you're missing it, and you hold steady at a restricted rate?
Well, Steve, I'm very much in the camp of these numbers this morning. The PCE inflation has actually tipped up a little bit more. I think that's an important fact. Unemployment still is 4.2%. The initial claims were actually down yesterday. So the environment is such that I think the Fed, and let me say one more thing, and if you look at real interest rates, with inflation at 3%, real interest rates are 1.5% approximately. That is pretty close to neutral. I know the chairman likes to say it's restrictive or mildly restrictive, but there's a lot of evidence out there given the demand for capital, the returns on capital, and the demand with the size of our debt that is probably closer to 1.5%. So at worst, we're at neutral. So perhaps it is time to wait and see and not be signaling that we're going to cut rates. I don't think there's any case for cutting rates in a rising inflation environment. One other thing, yes, perhaps look through some of the tariff issues, but remember the recent budget reconciliation bill is, I think, expansionary. We're going to add another $2 trillion of debt, so there's really no good case on the I guess, the intuition that unemployment is going to go up. That's not a case for easy rates in this environment.
Tom, 30 seconds left. Do you think then if we get a cut, that Chair Powell has, having resisted for a long time, fallen for the political pressure?
Well, that or he's fallen for the pressure that may be coming elsewhere on the board on the FOMC. So you have to guess. I don't know because you don't know Powell's mind, but it certainly has. He'll have an appearance issue. There's probably no question about that, given that inflation is rising in this environment and unemployment is so low. So it's a risk he has to run if he cuts.
You know your business better than anyone, right? So why not build an app to run it with Base44? This finance app solves your business head.
All right, let's see here. Let's listen into Times Radio about their perspective on Trump.
This is undemocratic, unjust, bullying, and bullying action by the American administration. And so far, we've been hearing Caroline, the press secretary, talking again about the deployment of troops to the streets of the American capital, Washington, D.C., and backing that up with yet more figures on the gains that she says have been made in the fight against crime in D.C. Total crime down, was it 19%, violent crime down 30%, homicides down 30%, and on went the list. A lot of the numbers that have been put in aid of this militarization of D.C. have been absolutely contradicted and contested from many sources. The overall principle, though, Adam and Laura, of putting these troops on the street here, it will be absolutely stunning, absolutely extraordinary. I guess part of what's going on is an effort to make the thing seem normal. Yeah, absolutely, and to possibly roll it out in other democratic states and cities to suggest that they're not doing a good job and that only Big Brother Donald Trump and his troops can do it. I mean, there is a constitutional question about the deployment of troops on the streets in America. They're meant to be fighting foreign enemies rather than fighting domestic citizens. There is a constitutional question as to whether the president actually has the power to order them in any case, or whether that should fall to Congress. And what he is doing is basically trashing the conventions of Washington, D.C., which has for a long time been a very democratic city, has been a city where a lot of the the apparatus of the city, the mayor or mayoralty and the police have been African American led, and he's basically putting in his boys to throw their weight around. So I don't think this is about cutting crime at all. I think this is about intimidating Washington, D.C., and as you say, writing his own version of events.
Another perfect example of how Times Radio, orange man bad always.
As those statistics go, I think it's almost impossible to tell after a relatively few days as to whether there's been any change. Although,
all right, breaking news here. Breaking news: the UNISH data is coming in. Inflation expectations at 3.5% versus preliminary 3.9. So that's good. That's good. Consumer sentiment is falls to 58.2. Estimate was 58.6. So sentiment is going down, but inflation expectations are also going down. So let's listen into. All right, Bloomberg is on break at the moment here with the feed that you'll hear. So let's continue on with Times Radio, and then we'll stop and then go to Bloomberg once they're done with the break.
If you have physical occupation by armed troops, some crimes are not going to take place. But I mean, that's not a way that you can normally, people can normally go about their lives. And certainly this has not been welcomed by and large by Washingtonians, although Donald Trump, of course, has claimed that he's had many people ringing him up saying what a success it is, and please could he do it in other cities?
I mean, I just like to add, I travel to Washington quite a lot. I was last there in April. I've always felt safe there. I would walk around with my phone out in my hand. I would never do that in London. So I personally, on the ground experience, don't really recognise the narrative that is being kind of peddled around, and these are friends that live there. So
now, as we're speaking in the briefing, the subject of the sacking of the head of the Centre for Disease Control has been raised by a journalist in the briefing room. Let's just have a listen in. That then was the line from the White House, Susan Monares, the now former head of the CDC, the Centre for Disease Control, was sacked because she was not aligned with President Trump's agenda. What Susan Monares has said was that she resigned because she would not rubber stamp, as she says, on the scientific list of directives, and she accused the health secretary, appointed of course by Donald Trump, Robert F. Kennedy, of, in quotes now, weaponizing public health. And she took 3 senior members of the team at the CDC along with her. It was one of the more dramatic examples of its kind, wasn't it?
it is. I mean, you've also seen the governor of the Federal Reserve. She's apparently suing Trump because she's been fired. You've seen people at the Library of Congress, they've been fired or resigned, and other sort of cultural institutions, the tax on the Smithsonian. I mean, it's just it's a narrative that keeps on running and running, isn't it? I mean, who's going to be left to run Washington?
I mean, what is going on is, black is white, white is black. In other words, what Trump is doing, he's attacked academia as well, is he is removing experts and replacing them with less qualified people, some of whom are conspiracy theorists, and this, because he wants to engender the feeling in the American people that all that matters is what he says, and what the people who support him say, never mind the facts. And of course, that was precisely what he did when he denied that he'd lost the election in 2020. He got an awful lot of people eventually to go along with him because...
Was it ever audited? What about the code in the machines? What about the really strange mail-in ballot issue at 4 o'clock in the morning? Who gets mail-in ballots that all go to one candidate and not to the other in certain districts? What about all of the people voting that were dead? These people, these liberals, they don't even pay attention to the facts. They have these normal tropes that they keep on just recycling.
They felt that he was someone who still maintained power and patronage, and he's using his patronage absolutely ruthlessly to reward people who are loyal to him, irrespective of whether they have.
Do you think that the deep state wasn't trying to keep power and only hired ones that believed in their cause? Or is it just Trump? Do you think that people that are working at certain institutions in the United States government have to have a certain mindset to make sure that they stay on the job or climb the ladder? Of course. What kind of mindset is that? Typically a liberal mindset. What about academia? Do you think a conservative professor can move up the administrative ladder at the university? Or would the ultra-liberal climb faster?
The qualifications to do the job.
We're also seeing it in the diplomatic field. So the ambassador to Greece used to be the partner of his eldest son, and she was a television personality. So I'm not sure, what diplomatic credentials she holds.
That stuff really matters. There's a phrase in America, inside the Beltway, which is sometimes used over here in connection with our politics. It means inside the Beltway, that ring road motorway around Washington DC. And it means if you are obsessed with the politics of Washington, the coming and going between agencies in Congress, the political machinations, they say it's an inside the Beltway story. This stuff is more than that. when it comes to the sort of a disease control, we're talking about a health secretary who was out and out anti-vaccine, and we can still remember the outbreaks of measles in Texas quite reasonably. The worry that this could occur again and again under the regime, under the health secretary as he's been appointed.
The problem is that there's issues on both sides of the fence on this. Ones that are against inoculations, some of them at the very far left or far right, depending on how you want to perspective, but at the far of the spectrum think that all inoculations are bad. And then you have people on the other side of the spectrum that think that all inoculations are good. And the reality is, it's somewhere in the middle. Some are not good. Some are good. The problem is that we don't understand the overuse of these. Problems with manufacturing. And then you add in this little thing called a national security state. Doing things that they shouldn't be doing. Enhancing things through gain-of-function research that has dual purpose for scientific discoveries and endeavors, but also military application. See, the nuance is really important. If someone tells you that all inoculations are bad, they're wrong. Flat out wrong. But if someone says that all inoculations are good, they're wrong too. You gotta understand the nuance. All right, please go to my store, the-studio-reykjavik.com, and get the Myotrol. Myotrol will help with the gene expression that you need so you can build muscle and maintain muscle. When you get older, you start to atrophy, and it's harder to build muscle. So Myotrol will help with the gene expression to help build that muscle. It has polyphenols, flavonoids, and lignans to help with that gene expression. Myotrol will also help with your mitochondrial health, so you have the ATP to maintain the muscle and build the muscle. This stacks really well with Gladiator Barley. So please go to my store, do resistance training, get the Myotrol, and build that muscle. It's for males and females. You'll also benefit from it if you're an athlete. So please go to my store and get the Myotrol. Another great supplement that I have that's really important for brain function is Clarity Factor. Clarity Factor will get rid of that brain fog, and you'll be able to concentrate on work or in school or in tasks at home. It helps to support your memory. And by taking Clarity Factor on a regular basis, preferably every day, what you're going to notice is that you're having positive neuroplasticity. You're going to be able to think faster. You're going to be able to recall your memories quicker. You'll be able to consolidate your memory better. So please go to my store and get the Clarity Factor. Clarity Factor stacks really well with C60, but it also stacks well with other neural stacks like NAD plus and ubiquinol, protecting your neurons and helping the conductivity, and that neuroplasticity is super important. So make sure you get the Clarity Factor. Now, why not stack it with Myotrol? So you're helping with your brain function. You're being able to get rid of that brain fog and you can concentrate. And with Myotrol, you're building your muscles by doing the resistance training and helping with the gene expression. So Clarity Factor to help with your brain, Myotrol to help with your muscle. Get healthy in 2025. Please go to my store, the-studio-reykjavik.com. Use discount 5 to get $5 off any order. Spend $100 or more, you get a free gift until supplies last. Please go to my store, the-studio-reykjavik.com. Get healthy. Follow my protocol, and you're going to notice that you're aging slower. Not faster. Slower. The key is aging slower.
This is one of the things that alarms me as a watcher of the data. Not only are consumers expecting worse inflation, they're also expecting unemployment to go up. So both sides of the Fed's dual mandate are showing signs of weakness from the perspective of consumers. We have over 60% of consumers expecting unemployment to rise in the year ahead, and income expectations, while by some measures they look a little bit better than last month, they're still much lower than 6 and 12 months ago. So, essentially, after the pandemic, we saw strong consumer spending despite low sentiment because consumers had the strong incomes to support that. They're not expecting that support going forward.
And Joanne, how do you expect things to change moving forward? Like as we start to look into the next month, what do you think is going to change significantly or maybe not change?
What I expect is it really depends on how the actual consumer-facing prices are changing in the next couple of months. So, consumers in April and May were really bracing for a pretty quick impact on prices. That clearly did not materialize immediately, but they're starting to see it. And if tariff policy continues to be unfirm, continues to be unstable or uncertain, consumers are still going to expect further inflation to come. And they also expect unemployment to go up because they understand that when there's policy uncertainty, it makes it difficult for businesses to plan.
All right, Joanne Shu, University of Michigan Surveys of Consumers Director. Always appreciate your insight. We want to take a look now at some of the stocks on the move. Lisa Mateo here, joined by Alexis Christophorus, and we're joined now by Bloomberg's Christine Aquino. Christine, we've got to start with Dell because their share is down 10%. So that's some good news from Dell.
Yeah, absolutely, Lisa. Dell ticker DLL.
Christine, want to talk a little Caterpillar because it too is getting beaten up today, down about 3%. Looks like those tariffs are really taking a bite out of the bottom line.
Absolutely, Alexis. The Caterpillar ticker CAT extending those opening declines now, as you mentioned, down more than 3% at the moment. Is all about tariffs. So the company is now warning that there will be a cost of as much as $1.8 billion for the full year to the company from the impact of tariffs, and an incremental tariff impact is expected to be around $500 million to $600 million in the third quarter. So Bloomberg Intelligence actually flagging that the update suggests tariffs will be a bigger drag on profit than previously anticipated. But the upside is they're still thinking that earnings will bottom this year and that the revised outlook will imply that operating margin will be near the bottom of its target range.
You have no good news for us. All this down to
I'm so sorry. It's a dreary Friday.
I mean, are just people not spending on the beauty as much anymore?
Yeah, absolutely, Lisa. So the next stock I want to talk about is Ulta, of course, ticker ULTA. That too is down. Shares now extending declines actually more than 4% at the moment. So it's funny because they did raise their sales outlook. They're saying that for fiscal 2025, sales will be $12 billion to $12.1 billion, which is up from their previous forecast of $11.7 billion. The kicker, though, is that comp sales are expected to be flat or up by a low single-digit percentage versus 6.7% in the second quarter. So we did hear from Ulta's CFO, Chris Lialio, saying that it is prudent to take a cautious approach because of uncertainty around consumer spending. And, that jives with what we've heard from the University of Michigan Sentiment Survey, for instance, right? Like there is just a lot of caution around the potential for higher prices down the pipeline in the second half of this year. And of course, second half of the year also tends to be a heavier spending period because you have all the holidays that people are gearing up for. And so, yeah, maybe it's just a sense of prudence among customers in terms of what they spend money on. And maybe beauty is lower on the list.
I don't know. It's still high on my list. It's just me. Christina Aquino, thank you so much. For more conversations like this, you can subscribe to our Stock Mover.
Please go to my store, the-studio-reykjavik.com, and get the Cleanse or the Max 35. It will help to boost up the immune system. You take a teaspoon a day, swish it in your mouth, gargle. It'll improve your epithelial lining in your oral cavity and your oral pharynx, increase your mucosal layer, And by doing that, you're boosting up your immune system. If you're not feeling well, take a tablespoon or 2 a day and then go back to your maintenance dose once everything's okay. So please go to my store, the-studio-reykjavik.com. Get the cleanse, get the Max 35, take them every day. I've been doing this protocol for over 5 years every day to help boost up that immune system. It's the first pillar of the core protocol. You take the foundation pieces, which are the multivitamin and the probiotic, and then Max 35 or cleanse or Max 14 for the first pillar to boost up the immune system, C60 to soak up free radicals, second pillar, third pillar, turmeric, ashwagandha, and lignans to boost up the immune system and help with your cardiovascular system, fourth pillar, boomer boost, to boost up those energy levels and rev up the metabolism. So please go to my store, the-studio-reykjavik.com. Use discount 5, you get $5 off any order. If you spend $100 or more, you get a free gift until supplies last. All right, let's stop listening to Times Radio because I'm tired of what they have to say about that. And let's see what they have to say about Trump revokes Secret Service protection for Harris. So let's listen in on that.
President Trump has revoked Secret Service protection for former Vice President Kamala Harris. A senior White House official tells NBC News the Vice President typically only gets 6 months of protection after leaving office. But a Secret Service official says President Biden had signed an executive memorandum in January to extend protections for Harris to 18 months. It's only been about 7 months since Harris left office. A senior advisor to Harris issued this statement in response. The Vice President is grateful to the United States Secret Service for their professionalism, dedication, and unwavering commitment to safety. This is not the first time that Mr. Trump has ended Secret Service protections for someone. Former National Security Advisor John Bolton had his security detail terminated just hours after Trump returned to the White House in January. Bolton served in Trump's first administration, and his home and his offices were searched by the FBI earlier this week. Protections were also revoked. And that is my phone going off. I apologize. Protections were also revoked for Mr. Trump's former Secretary of State Mike Pompeo and former top aide Brian Hook. Then in March, Trump ended Secret Service protections for President Biden's adult children, Hunter and Ashley. What does it all mean? Let's bring in Washington Bureau Chief at USA Today, Susan Page, and MSNBC senior Washington correspondent and co-host of The Weekend, Eugene Daniels. Susan, quickly, I mean, this news is just coming into us, but what's the legality of this? If President Biden had extended the protection and then President Trump overturns President Biden's offer, is this just like an executive order that a president can overrule and so he can go ahead with this? And what do you think it means?
Absolutely. It's up to the president. It's up to Biden to extend it. It's up to Trump to decide that's not what he wants to do. That's why you want to pass laws instead of just signing executive orders, because they have more staying power. You know, in a way, it's not surprising. Traditionally, vice presidents get 6 months of protection after they leave office. On the other hand, we live in a very violent time. We know that every day with reports of violence like we see in Minneapolis.
But it's also the Democratic Party that's trying to promote that violence. Did you listen to what Al Sharpton had to say yesterday? I mean, Reverend Sharpton. It seems like everyone can be a reverend these days.
Now, and it comes at a really awkward time for Kamala Harris, whose book is coming out in days, and a big book tour is planned. And now the security arrangements I'm sure she was counting on for that tour have just been taken away. And by the way, I've been trying to get an interview with her about a new book. So if she's watching,
listening,
yes,
okay.
Anyway, but I do think
Message out from
I don't think it's an outrage. It's not unprecedented. It's not one of those kinds of things. It does create some complications, I think, for the former vice president.
Eugene, why did President Biden feel that there was a need to extend it? Was it because of what Susan is talking about, that we live in this time of unprecedented animosity towards not just people, but politicians, as we also saw up in Minneapolis a few months ago?
Before I got here, I was on the phone with a bunch of former Biden and former Harris officials and current Harris senior advisors, and the sense was at the time in the administration was, look, at the end of the day, this is a Black woman in America. We've seen the death threats and the kinds of things that have come our way from the Secret Service.
See, shit, I mean, they always bring in racism. Always. And this guy, it's time. Let me blow it up to full screen here. Dude, it's time to get a fucking haircut. Damn. It's always about race. Always. Shit.
They wanted to extend it. It would have ended next year, next summer. And I was talking to a few of the A's, and all of them said the same word to me, which is, this is predictable, right? Were they prepared for it? Susan saying, with her book tour coming up? No, because the Secret Service works for weeks on these things. The security apparatus is planned for a very long time, so they weren't prepared for it. But it's also a
piece this straight.
Of how
they didn't seem to be working on double duty in Butler, Pennsylvania. You remember that, right?
Trump works, right? Because it is retributive, right? It's not just, we want to save money on the Secret Service, or, this is weird. They do it because, some of the Harris folks said because of distractions from all of the things that are swirling around. And two, just because he doesn't like Vice President Kamala Harris. At the end of the day, that is what I heard over and over and over again. And it speaks to how Donald Trump operates. He used the government to...
But out of her own mouth, she gets up on stage and she says, we got to fight. We have to, push back. We have to be organized. And we're not talking about just typical rhetoric. These are code words for the BLM movement that literally burnt down your town a few years ago. Oh, by the way, this guy needs a haircut. I'll even pay for the haircut.
With his own personal animosity with people.
And then, of course, we saw the FBI raiding John Bolton's house. We have no idea whether one thing leads to another thing, but...
And that's, of course, much more serious. Because that is the use of the judicial system, perhaps, against someone who has been critical of him. That is, when you talk about the thing with Kamala Harris, not unprecedented. The thing with John Bolton, that's pretty unprecedented.
Let's listen into Victor Harris about Europe's potential collapse. Right? I think this is important here because the UK,
Germany, it's got 15 to 16% of the population already.
It's really important to pay attention to what's happening in Europe with England, France, and Germany, because I think they are canaries in the coal mine because of sovereign debt issues. And that might cause a contagion in the financial markets.
The more we see contemporary Europe, the more we have grounds for deep concern. There's mass demonstrations in Britain against illegal immigration and crime. There's a perception that immigrants, many of them in Britain illegally, are not treated severely as they should be according to law. In Germany, there is massive defections in support for illegal migration. I think the German Chancellor, Friedrich Merz's subtext was, we can't afford to subsidize 15% of our population who came here for the most part illegally on entitlements. We have the same type of unrest appearing in the Netherlands and to a lesser degree in France. Unfortunately, illegal migration and unsecured borders are not Europe's only problem. Hello, this is Victor Davis Hansen for the Daily Signal. We're hearing a lot about Europe in the news, primarily because of the Ukraine-Russian war and the trade wars or tariff disagreements with the United States. But the more we see contemporary Europe, the more we have grounds for deep concern. There's mass demonstrations in Britain against illegal immigration and crime that's not treated in the way it is with citizens. There's a perception that immigrants, many of them in Britain illegally, are not treated equally, and I mean equally under this in the system, that they're not treated severely as they should be according to the law. In Germany, there is massive defections in support for illegal migration. Remember, former Chancellor Merkel said, yes, we can let in people from the Middle East, mostly Muslims. She let in 1 million into Germany. It's got 15 to 16% of the population are aliens, are not German citizens. They weren't born in Germany. We have the same type of unrest appearing in the Netherlands and to a lesser degree in France. Unfortunately, illegal migration and unsecured borders are not Europe's only problem. They made a conscientious decision, that is most European countries, to lessen their carbon footprint on the idea that they were going to go to zero net emissions, meaning they would disavow all use of fossil fuels. The result in a country like Germany, they shut down nuclear power plants, they shut down gas and oil-fed plants, and the same is true with Britain. And we're seeing across the board in Europe energy prices spiking, and average citizens can't turn on the heat in the winter or air conditioning to the extent they have it in the summer. But more importantly, even, their businesses are not competitive globally now because the price per kilowatt hour is more expensive than even here in the failed state of California, which has the highest electricity cost in the United States, again, because of similar policies of Europe. But that's not the only problem. The post-war order of 80 years is over with. Remember, the United States rebuilt Europe, or helped to try to rebuild Europe through the Marshall Plan, the creation of NATO, the Bretton Woods Accords that had the World Bank, International Monetary Fund. The idea was that in the shambles of World War II, we needed to get the European powerhouse economies back on their feet, and with them the global economy. So the United States really had two or three principal agendas. They were going to allow free entry into the U.S. market from a recovering Europe, while allowing them, Europe, to have high tariffs against American exports. We were going to subsidize the North Atlantic Treaty Organization, not so much during the Cold War. Europe stepped up to the plate, but after the Cold War, in the last 30 or so years, we have been subsidizing 16 to 18% of the budget and much more to keep global communications, sea lanes, travel safe from terrorists and belligerents. That's over with now. There is now a war, not in Chechnya, not in Georgia, but right on their doorstep with Russia and Ukraine. And the Europeans had not all made their promises when Donald Trump came into office in 2017 to invest 2% of their GDP on military affairs. Trump was severely criticized for badgering them. Now almost 22 or 23 of the 32 nations have met their NATO requirements, and now they promise to go up to 5%. But as recently the German Chancellor Friedrich Merz said, we can't afford the welfare state anymore. And I think his subtext was, we can't afford to subsidize 15% of our population who came here for the most part illegally and are on entitlements. But in a wider sense, the whole socialist paradigm is not producing goods and service that allow such general entitlements. The borders are insecure. Illegal immigrants are not assimilated, acculturated, integrated into the German, French, European body politic. And they're going to have a terrible time spending 5% of GDP to defend themselves. This is in addition to having to lower their $200 billion surplus for the United States.
This is important because their countries are over indebted. So if their society becomes less productive, if their society has to kick out more entitlements for its own citizens and the illegal aliens, they're moving over a debt cliff. They're going to have problems in being able to service the debt because as they issue more bonds into the market, as their central banks start to ease and print more money, it's going to be inflationary. Bond yields are going to go up. It's going to be harder to service the debt year over year. And then they'll have to tax the citizens more and more, and it'll be a doom spiral.
That Europe has to do. It has to return to common sense energy policies, use their natural gas, use oil to the extent they have it, build nuclear plants, be competitive on the world market in terms of energy costs. They need to secure their borders. They need to have legal-only immigration. They need to prune back the state, the socialist state. Can they do it? It's going to be very difficult because many in Europe feel, as the American left, that the medicine is worse than the disease. And if that's true, Europe, our partner in the West, is going to be looking at some pretty tough times ahead. Thank you very much, Victor Davis Hanson, for the Daily Signal.
Thank you for tuning in.
Please go to my store, the-studio-reykjavik.com, and get the zeolite. Zeolite will bind to heavy metals, toxins, and chemicals, including PFAS, to be able to urinate out those toxins and heavy metals within 6 to 8 hours. All right? Zeolite binds to them, and it allows you to get rid of them. So take 3 drops, small drops, underneath your tongue. Drink filtered water. Do that every day, and you're detoxifying your body. Now, it's important to take zeolite, but it's also important to clean up your environment in your home. Reduce your exposure. Drink filtered water. Make sure you stay away from processed foods. Clean your cupboards and your closets and your garage, your basement. Get rid of those chemicals that you really don't need. If you do need them, then put them in a double layered container. That way you're not breathing in these substances, because these chemicals accumulate in your body, affect your immune system, they affect your endocrine system and your hormonal system. So it's really important to lower the exposure. But if you are exposed, it's important to detoxify your body. So please go to my store, the-studio-reykjavik.com, and get the zeolite. Get rid of those chemicals that you're ingesting, all right? By having the zeolite bind, and you get to urinate them out within 6 to 8 hours. You can do a heavier detox by taking 10 small drops and drinking the filtered water, and do that every day until the bottle is done, and do that once or twice a year. But I think that doing a daily detox is better for you. I also have another great product that helps to detoxify your body. And you can take it with the zeolite, right? But you can take it separately. Heirloom barley. Heirloom barley will help to detoxify your body, bring down inflammation, and soak up free radicals through superoxide dismutase. Bringing down inflammation, you're helping your different systems. You're helping your immune system. You're helping with your joints. You're helping with, by bringing down systemic inflammation, you're helping to get your endocrine system into homeostasis. You're bringing down inflammation at the cerebral level, so you're maintaining the myelin sheath of your neurons. By bringing down inflammation at the joint level, you're helping with joint health. So taking this, detoxifying your body on a regular basis is super important. And you'll notice that your body is performing better because you're literally detoxifying your body. Now, over the years, you've accumulated a lot. So if you haven't done a detox before, you're going to see a big difference between not doing a detox protocol going towards a detox protocol. But a great way to do it is to take the heirloom barley and stack it with the zeolite. So please go to my store, the-studio-reykjavik.com. Use discount 5, all caps, discount number 5. You get $5 off any order. If you spend $100 or more, you get a free gift until supplies last.
President Trump has
All right, let's listen into The Hill here about foreign students.
We're back and eager to share stories of wildlife conservation.
We have the best job on the planet and love getting to take you along on all.
The Trump administration is looking to put a limit on the amount of time that foreign students can study in the U.S. The Department of Homeland Security is proposing a rule that it says will allow for proper vetting of certain visa holders and prevent visa abuse. The DHS says, quote, for too long, past administrations have allowed foreign students and other visa holders to remain in the U.S. virtually indefinitely, posing safety risks, costing untold amount of taxpayer dollars, and disadvantaging U.S. citizens. This new proposed rule would end that abuse once and for all by limiting the amount of time certain visa holders are allowed to remain in the U.S., easing the burden on the federal government to properly oversee foreign students and their history.
Under this new rule, foreign students would be allowed to stay no longer than 4 years. That's as opposed to the current duration of status system, where they can stay for as long as they are enrolled as a full-time student. The non-profit group, President's Alliance on Higher Education and Immigration, spoke out against the proposal. It says, quote, this proposed rule sends a message to talented individuals from around the world that their contributions are not valued in the United States. This is not only detrimental to international students, it also weakens the ability of U.S. colleges and universities to attract top talent, diminishing our global competitiveness. President Trump attempted to introduce this same rule near the end of his first term, but it was withdrawn a year later by the Biden administration. Now, this announcement comes on the heels of Trump also saying he wants to allow 600,000 Chinese students into American universities. So I am against this new rule, which is perhaps no surprise, but aside from my own status as an immigrant, I should say, a full-time student here, I was too old for that. But this actually goes to, I think, a bigger question, which we have discussed on Rising this week in relation to the Chinese students. I consider it useful and important for the United States to attract the most gifted people it can, the most highly educated people it can, and to harness that intelligence and potential entrepreneurship or scientific knowledge or whatever it should happen to be for the good of the US. And I think everyone is in a global competition for this kind of talent. Highly educated people are much less likely overall to be a drain on the system in any kind of dependency kind of fashion. And so I am broadly against this rule and supportive of the US acquiring as many foreign students as it reasonably can.
Yeah, I have sort of mixed feelings about this because I do agree that if we are going to have immigration in the United States, then the proper way to do it would be a meritocracy, bringing in the best and the brightest in ways that can boost the American economy while also perhaps bringing innovation, building companies, entrepreneurship, things like that. I also have concerns just because when I was doing some research last year about STEM degrees and particularly coding, because I was sparked by a stupid X thread about the whole Learn to Code fiasco, which I'm sure everyone remembers.
Sure.
And I was going through these computer science and other STEM graduates who are American citizens and found out that a lot of them are underemployed. A significant amount are not even working in the industry that they studied to go to school for, and a large part of that is because of H-1B visa holders. Now, that's not necessarily a direct overlap with the people that we're talking about here on student visas, but presumably some people come and get educated in the U.S. and maybe go home and get an H-1B, although I think these people are more likely to get green cards. But all that is being to be said is that when you do focus on highly skilled immigration, you also have to consider potential crowding out of Americans who are also paying a lot of money to get these college degrees. And I do know a few people who went through college and basically just kept getting professional degrees because they knew it would allow them to stay in the United States. So there is some abuse of the process. I don't know what percentage of the people who are on these student visas are abusing it.
Well, I can try and help you with that, Amber, because in this proposed order, they talked about the fact that there are 2,100 people who entered the United States with this kind of student visa between 2000 and 2010, who are still here on active F visa status. In other words, these people are claiming that they have remained in full-time education for a minimum of 15 to 20 years, which is quite a long time. Now, against that, what there are apparently, or last year, there were 1.1 million foreign students in total of these visas, and 215,000 of them were pursuing doctorates. So, obviously, pretty advanced educational levels. On the H-1B visa question, I think more sympathy for the case you're making there, because one of the problems I have, I guess, from a somewhat left-leaning perspective, is the H-1B visa tethers the visa holder in quite a close way to the employer.
That's right.
And if they lose that job, they are at risk of having to leave the country. Therefore, to my mind, it gives the employer too much leverage, and a leverage that he or she would not have over a native-born American employee. Right. And I do think that that's a valid point for sure.
Yeah, that's definitely true. I think one of the other things that the Trump administration could potentially look at in terms of making sure that students who do come to the U.S. to get educated and take advantage of our university system don't just go home and take that and lead to brain drain, right, is potentially to tax remittances, which is money that they send back to their home country. It's something that the U.S. has looked at with Canada and Mexico as of late because of the illegal immigration crisis as well. And a lot of other countries do tax remittances as a way to keep the income that's being generated in their country within the country. So potentially one area just to look at to make sure that there's some incentive for the best and brightest to stay here after they get educated here. But I separately have a lot of concern about the Chinese students. The White House did clarify, saying that it's $300,000 for each year for 2 years, which is an extension of the current policy while they negotiate this trade deal with China. Now, of course, I would want to know, well, what are we giving up, or what are we getting in exchange for allowing 300,000 Chinese students a year?
Just to interrupt, Mississippi is remembering Hurricane Katrina. It was 20 years ago. I mean, time has really flown by. I mean, I can remember Katrina like it was yesterday. Wow.
Some of whom could be co-opted by the CCP. The rest of them will certainly be spied on. What is the trade? What is the trade?
The world's first titanium nonstick pan. And blow your hair back. I'm Mike Regale, 3 Michelin chef, and I've been cooking for 25 years.
What is the trade? What is the trade arrangement there? Are we getting enough for offering China basically a open door to our university system?
Well, people who are on the student visa anyway are screened, to my understanding. The other thing is when people, obviously the CCP is the CCP, I'm not defending that element of it, but we are, you say what are we getting? Well, we are potentially getting the intelligence and skills and talents of those people if we can hold on to them beyond the period of their education. So I don't think there's a reason to differentiate out. I mean, the principle still remains that it is to the United States' advantage to have the smartest and best educated people it can here rather than elsewhere.
But there is a much higher risk when we're talking about Chinese students because of the CCP spycraft. And we know from reports that there have been numerous instances of research secrets, lab materials being stolen and sent back to China from Chinese-born individuals and even Americans who have been assisting them. And I was listening to a panel this past weekend from some higher education experts, and one of them pointed out that when a Chinese student who is not loyal to the CCP comes to the U.S. to study, they often look at the class rosters of the classes that they sign up for. to make sure that there are no other Chinese students in there, because they know almost certainly that that's a CCP spy. So those are really the lengths that they go to, and I think we just can't underestimate how dangerous it could potentially be to just open the floodgates.
I'm sure it's a topic we'll return to again in the near future. Meanwhile, Alligator,
Please go to my store, the-studio-reykjavik.com, and get the C60. C60, you can get in avocado oil, MCT coconut oil, or in extra virgin olive oil. Now, C60 is a very potent antioxidant. It's part of my second pillar of the protocol. By soaking up free radicals, you're improving your immune system, helping your cardiovascular system, helping your brain function. And you're reducing stress in your cells and in your tissues. So by bringing down that stress, the cells will perform better. And by soaking up those free radicals, you are improving the mitochondrial health. Your energy levels will go up because there's more ATP being created by those healthy mitochondria. And so the tissues will perform better. Your organ systems will perform better. By soaking up free radicals at the vascular level, you're reducing plaque formation. Soaking up free radicals at the neural level, you're helping to maintain the myelin sheath because you're reducing the stress on the neuron. You're boosting up those energy levels because of you're improving the mitochondrial health. You need lots of mitochondria to produce those energy levels for making neurotransmitters. And so your neuroplasticity is going to improve because the neurons are healthier. Your endocrine system will perform better. So please go to my store, the-studio-reykjavik.com, and get the C60. Take a teaspoon a day, every day, preferably on an empty stomach for best absorption. If you work out, take it before your workout. You'll soak up the free radicals that you're generating during your workout, and you'll recover quicker. Take it every day, and you're going to notice that you're slowing down the aging process. But not just slowing down the aging process, your body is healing. Your body is performing better. So I've been taking C60 since 2016. So please go to my store, the-studio-reykjavik.com. Get the C60. It stacks really well with NAD+, ubiquinol, resveratrol, clarity factor. Now, the protocol, the foundation, multivitamin with the probiotic, and then the pillars. The first pillar is Max 35, Max 14, or cleanse to boost up the immune system. Second pillar, C60, soak up free radicals. Third pillar, turmeric, ashwagandha, and lignans to boost up the immune system and improve your cardiovascular system. And Boomer Boost, boost up those energy levels and rev up your metabolism. If you take that core protocol that I just mentioned, you're radically slowing down the aging process and allowing your body to heal because you're targeting all of the vector points that make you age. You're bringing down free radicals. You're bringing down inflammation. You're revving up those energy levels. Please go to my store, the-studio-reykjavik.com. Use discount 5 and you get $5 off any order. All right, let's listen to, let's see. Let's listen to Fox News on their take of Harris losing her Secret Service protection.
In just a few weeks, President Trump has done more for D.C. residents than Democrats did in 50 years. And this can be replicated in other crime-ridden cities across the nation. As President Trump has said, all of these elected officials in charge have to do is pick up the phone and ask for the president and the federal government's help.
So you hear it there, the White House touting President Trump's federal takeover of the D.C. police force. That has prompted a huge wave of Democratic criticism. But now the governor of California, Gavin Newsom, may be taking a page out of the president's book. Peter Ducey joining us live at the White House with more on this. Hi, Peter.
But Bill, they're calling it something different. Governor Newsom thinks that something called a suppression
team is superior to a National Guard deployment. He thinks these suppression teams have already had luck in Bakersfield and San Bernardino, so they're going to try to make state police more visible and more involved with local crime prevention on a statewide level.
Crime's an issue and we want to tackle it, and we continue to do more in that space. And we announced and highlighted some of the expansion. What is not contradictory, respectfully, is that we're doing it in partnership with our local communities. We did it in partnership with the Biden administration prior. We're not talking about the nationalization, the militarization of the Guard and militarizing the United States cities.
But White House officials think Democratic leaders are doing their constituents a disservice by failing to pick up the phone and ask for a National Guard deployment.
This is our message to Americans in Democrat-run cities nationwide. Decline is a choice. You don't have to live in constant fear of being robbed, raped, or murdered. Your leaders are lying to you, and they have been failing you for decades.
And when you talk to officials around here at the Trump White House, they think that the success with cleaning up D.C. over the last couple of weeks since the beginning of August is one of the second term's biggest successes. Back to you.
Peter, before you go, can you tell us a little bit about what we're learning regarding Kamala Harris and her Secret Service detail?
Yes, a White House official texted me this morning to confirm that her Secret Service detail has been suspended. The Harris people have told us that they don't have any reason to, no reason was given for the suspension. But there are two important points about this. Point number one, vice presidents typically only get 6 months of protection after leaving office, but Joe Biden extended hers. And the other point here, she has got a book tour that starts on September 24th. She and her publishers and her hosts will now be responsible for...
Now, let's think about that for a second. Was it Joe Biden that actually extended it, or was it the auto pen and the invisible hand that was controlling it?
Bill, for private security, that is going to be a huge expense.
Too bad.
Dana and Bill.
And Peter, we're heading into the holiday weekend here. Is the White House liking what they're seeing when it comes to gas prices?
Yes, and this morning when I was asking some officials about something else, they said, why don't you let people know that gas prices are the lowest in 4 years? And so we do have a chart right here. It shows lowest Labor Day weekend, I should say, in 4 years. $3.79 a gallon in 2022, $3.77 in 2023, $3.29 in 2024, and $3.15 is the projection for this weekend. And officials think the changes in policies are the reason for this decline.
President Trump campaigned on that, right? I want Americans to pay less, and I want them to have more job opportunities. Kind of hard to be opposed to that, but he's actually pursued policies and messaging to deliver just that. Produce more energy in America, you get lower prices, you get more jobs. That's our platform.
And officials here from the president on down still want gas prices to come down lower, below $3 a gallon. They think that can happen once these policies have some more time to take effect. Dana and Bill?
I think we all want them as low as they can get.
Indeed,
Peter
thank you.
Ducey, live at the White House. Good to see you, Peter.
Hey everyone, I'm Emily Campagno. Catch me and my co-host.
Oil is trading at almost $64 a barrel, and that's at the high range. It's trading between 60 and 65. So I suspect that oil is probably going to go down a little bit more because it's at the high point of the trading range. Now, natural gas is trading at 2.974. It's supposedly going to start going up in Q4 and Q1 of next year, in the range of around 3.3, 3.4, maybe 3.5. Some analysts even say in the high 3 handle, like 3.7. Please go to my store, the-studio-reykjavik.com, and get the gel. The gel I have in 2 different forms. You can get it in the tube form or in the quick dispenser. This is a dual purpose product. You can use it as a daily skincare. You can put it on a cut, an abrasion, or a minor burn. It'll help to heal. Why? Because it keeps it clean. In addition, you can use it as an aftershave. You can put it on your hands, around your mouth, around your nose, around your ears, lightly coat your nostrils. It stays active for 5.5 hours if you're not feeling well, or someone around you is not feeling well. It's protective. You can't do that with Perel. So please go to my store, the-studio-reykjavik.com. It's the-studio-reykjavik.com. The link is in the description of this video and all my videos. And get the gel. You're going to need it for this fall and winter. Trust me. There's going to be cases. You're going to start hearing that people are not feeling well. It's better to be prepared. Go to my store and get the structural nano silver toothpaste. It whitens your teeth, freshens your breath, helps reduce gum inflammation, and improves your gum health. This is very high quality toothpaste, has no fluoride in it. Please go to my store, the-studio-reykjavik.com. Get a few tubes of this toothpaste for your house and help support the work that I do. Please go to my store, the-studio-reykjavik.com. And lastly, the structural nano silver drops and lozenges. I have it in elderberry and zinc in a 21 count. And I also have the drops, which are smaller, in a 100 count per bag. You can get it in blueberry, cherry flavor, and also honey and lemon. Very high quality. If you have an irritation in your throat, take them right away to mitigate the problem. We're going into the fall and the winter season. Be prepared. Get a few bags for your household and for work. You never know when you need it. The moment you have that irritation, take them right away to mitigate the problem. Please go to my store, the-studio-reykjavik.com. All right, let's listen in to Bloomberg.
I think where does this go from here? So I think if we continue to focus on ESG as sort of risk and returns, I think that's where we go from here. These values-based things are very subjective. I think they're going to be ever changed. Subjective is the word of the day.
My mind is blown right now. You have done it for me. Thank you so much. We really appreciate it. Bloomberg Intelligence Senior ESG Strategist with us this morning. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM, that's channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM, channel 121. It's presented by Oracle. So stay tuned. We have the latest market news, industry research. The next hour of Bloomberg.
Let's go into CNBC here. They're talking about, I think, Cook. They're talking to a former White House attorney, Ty Cobb.
Meantime, let's show you a live shot from a federal court in Washington, D.C., where at the top of the hour, attorneys for Fed Governor Cook will make the case to temporarily block the president from removing her from office. Joining us this morning to talk about that hearing is former White House attorney in the first Trump White House, Ty Cobb, joins us on the phone. Ty, appreciate the time this morning. Thanks.
No, I'm so sorry. I got some technical difficulties down here and couldn't be with you on the air. Thank you.
No, we're grateful to have you. You got some, I think you have some very, should I call them stern views about the role of DOJ or maybe the GSEs right now?
Oh, very much so. It's very difficult for me as a former prosecutor to go to a lot of time, effort, and angst at the Justice Department to see what's going on these days. And, I'm very disappointed that they have abandoned their independence and are helping Trump on this on his vengeful retribution tour of his former adversary.
Do you think that these referrals will result in charges?
I really don't know. I think that it's going to be interesting to see. I think that Bolton has some issues. I think there's some complications there. Anytime a senior federal employee with high-level security clearances writes a book, it's a very fine line, and he's had so much access to classified information given his service to the country that there may be an issue or two, but historically it wouldn't be prosecuted like this. This is not like Trump, who had dozens, hundreds of classified documents in Mar-a-Lago, was showing him the deaths and friends, including his chief of staff, Susie Weil. And then when when asked to return them, said no. That's a very different situation than somebody who has devoted their career to national service and in the security realm, having a document or two. On the other hand, we really don't know what they got, and I think we have to, in fairness to rationality, I think we have to wait and see what the actual facts are with the report.
Right. How do you, I assume you've had a chance to read Cook's lawsuit. What do you make of Abby Lowell's, the structure of his framework of defense?
I thought he did an excellent job. I think there are a lot of issues here. I might have just on my understanding, pushed the Article 1 issue with the congressional reporting a little more, but I think it's targeted. It's targeted in an effective way. It's targeted, I think, in a way that's designed to succeed today and to prevent Trump from firing her immediately. I thought Abby did a good job. Abby is an excellent lawyer and a fighter, and it turns out at this stage of history, he is representing all the people that Trump is going after.
Yeah, Mr. Cobbs, David Faber. I mean, much has been made, of course, about the fact that during the first Trump administration, of which you were a part, there were guardrails in place, and the president perhaps was prevented from pursuing things that in this administration he's been very successful at in terms of gaining the levers of power in so many different areas. I'm just curious as to how you view it more broadly in terms of the amount of power that he's been able to amass in such a short amount of time in so many different areas of American life.
I think it's really stunning, David. I think what we've seen less at the White House, where it's sort of like an office and something and stuff. But look at the cabinet. I mean, I don't think I've ever seen more particularly responding group of people. These cabinet meetings are ridiculous. Apparently, there's a rule that before you speak, you have to say that before you speak something, you have to say something complimentary about the president. I mean, it's ridiculous. And if he has neutered the cabinet, people like Marco Rubio, who years ago was when he ran in 2015, couldn't have been more accurate or critical of Trump. Frankly, Trump is very harsh on people who criticize him today. If you replay some of the Rubio statements back in 2015, where he was talking about Trump's, authoritarian ways, his ignorant ways, I mean, that's much worse than what people like to do. But if he can neuter the cabinet, if he can neuter Mike Johnson in the House, and if he can gather senators who are so gutless and abandon their oath and affirm people like RFK Jr. and Hagstead and Cash Patel, it is a shocking time. So at the White House, it shouldn't be a surprise where they aren't cabinet secretaries, they aren't elected representatives. They're just people doing a job as government servants. And Trump easily dominated him because he picked people who was only serving.
So we're running out of time. I appreciate the call. I appreciate it very much.
The audio wasn't that great with that. First court hearing today on Lisa Cook lawsuit. That was 15 minutes ago. Let's listen into Bloomberg here.
I'm concerned about the profitability of this AI service.
All right, Bloomberg cross-asset reporter Isabel Lee, thanks so much for shining a light on some of the big market movers today. We appreciate it. All right, folks, the court battle over the future of the Fed, it kicked off today. There's a federal judge in D.C. Trying to figure out whether or not to grant Fed Governor Lisa Cook a temporary restraining order to block President Trump's attempt to fire her over allegations of mortgage fraud. I want to bring in Tyler Kendall, Bloomberg Television's Washington correspondent for more. He is at that D.C. courthouse. I guess, Tyler, my first question is, has any news come out of this yet?
Yeah, hey Alexis. So there's a lot of different things that we could be following here. The arguments here at the courthouse in Washington are about to enter into the 1 hour mark. And keep in mind, this hearing is just about Cook seeking this temporary restraining order, which would reinstate her on a temporary basis into her seat while the broader legal case plays out in the court system. But it was interesting to hear from one of her top lawyers, Abby Lowell, tell the judge here in Washington that they do not expect the Fed to act until the court rules. That is then raising the question here on if a TRO is even necessary if the Fed's not going to seek to remove Cook today until they get a more definitive legal answer from the courts when it comes to President Trump's firing of Cook. That could then lead us a few different paths. You had mentioned at the top of the show the idea of an injunction, a preliminary injunction would be the next step here that would grant Cook basically the protection to be reinstated until the final court case is done and dusted, works its way through the legal system. Now, Cook's lawyers are still arguing that a TRO is necessary today because they essentially want that extra cushion. We heard Lowell talk about this idea of maintaining the status quo, making sure that there is nothing preventing Cook from being here in her job until there is a final ruling on these allegations that the Trump administration has brought forward when it comes to mortgage fraud.
Tyler, can you dig more into the lawsuit itself from Cook? They were saying something about it possibly being a clerical error, that there's no evidence that she's benefiting from the double mortgage. How significant is that?
Right, so we got sort of a preview of the defense that we could hear from Cook's team in this court filing yesterday for the formal lawsuit, and how this is maybe going to play out. So Cook is suing on a few different grounds. One, she's saying that President Trump violated a federal law known as the Federal Reserve Act, which gives him the power to remove a Federal Reserve official, but only if there is sufficient cause. Cook's team is arguing that there is not sufficient cause. You're going to hear this idea of cause come up a lot because it's a little murky. It's not explicitly defined, though historically has been meant as malfeasance or a neglect of duties while in office. That has actually already come up today in the hearing, with Cook's lawyers pointing to the fact that these mortgage allegations have to do with nothing to do with what she does in her capacity as a Federal Reserve governor. In fact, they happened before she was ever sworn into her position. So that's one of the threads to follow here. Now, in those court filings, we did hear from her lawyers sort of previewing the defense, and they said that these allegations are not true, but if there were errors on her mortgage applications, then perhaps it was a clerical error, and that Cook did not intend to deceive anyone when it came to this, and that also nobody was harmed. That's a legal standard known as materiality. And I bring that up because this idea of intent, this idea of harm, those are going to be sort of some of the pillars that we hear these arguments be built around as the judge decides how to move this forward.
And Tyler, we know this may be a long, protracted court battle, but whoever wins in the end, will they ever be able to undo the damage that's been done here, especially to the Fed's credibility, do you think?
Well, it depends who you ask, I guess, because at this point, of course, we've heard Federal Reserve officials say time and time again that they are independent and that they are data dependent. But this pressure campaign from the White House really has reached this tipping point. As you well know, it started earlier this year as President Trump started to criticize Fed Chair Jerome Powell, often calling him too late, referring to the interest rate decisions. It then morphed into the criticism that we saw when it came to cost overruns at the Federal Reserve's headquarters here in Washington. And now we have this full-blown legal case over his move to oust Lisa Cook. There are various reporting here about what the Trump administration is ultimately aiming to do. For example, we had reporting earlier this week from my colleague Saleha Mohsen, who was reporting on this idea that if President Trump is able to secure a majority on the Fed Board of Governors, 4 out of the 7 seats being Trump appointees, then that could also have impacts on the Federal Reserve Bank, regional bank presidents. So there's a lot of different factors that you could follow here and a lot of wide-ranging impacts depending on how this goes.
All right, Tyler Kendall there for us live in Washington, D.C.
The Federal Reserve has never been independent. There's political and also lobbying group pressures that force certain types of decisions by the Federal Reserve. There are many moments in time where the Federal Reserve was not independent. Look at what happened during the FDR with the confiscation of gold and trying to control the currency markets. Look at what happened under Nixon, where the conversion of debt with foreign holders, we stopped the conversion of gold. What about Lehman? Do you think the Federal Reserve was independent when it made its decision? Wake up. Please go to my store, the-studio-reykjavik.com. Get the Good Night Formula. Good Night Formula is going to help you get into 3 to 5 cycles of deep sleep and REM sleep so you can consolidate memory, detoxify your central nervous system, and be well rested. With chronic sleep deprivation, it increases the chances of early onset of dementia. This has tryptophan, melatonin, GABA, and passion flower. You want regular sleep so you're slowing down the aging process and improving your neural health. So please go to my store, the-studio-reykjavik.com, and take this every day. You're going to notice a lot of people within your social network, if they're not paying attention to neural health, they're increasing the chances of early onset of dementia. Within 5 years, you're going to see lots of people having problems with memory, motor coordination. So please go to my store and pay attention so you are not one of these types of individuals. Now, Gladiator Barley will help to build muscle. It's a high-density protein. It'll help you to build muscle, detoxify your body, bring down inflammation, and soak up free radicals with superoxide dismutase. This stacks really well with Myotrol. Do resistance training and build that muscle. It also stacks well with Boomer Boost. And I have dual-purpose deodorants for males and females that will help to detoxify your body, and you use it as a daily deodorant. It has no aluminum, no baking soda. It's made from essential oils from the Himalayas. Very high quality ingredients. You can get it in citrus. You can also get it in peppermint, lavender, and tea tree. Use it every day and detoxify your body. It's for males and females. If you spend $100 or more on an order, you get a free gift until supplies last. Use discount 5, you can get $5 off any order. Get healthy. If you follow my lead, these are things that I take every day. If you follow my lead, you're going to slow down the aging process and you're going to have longevity. So please go to my store, the-studio-reykjavik.com. All right, let's continue on here.
So that's a good thing. And so hopefully if we get a little bit of, if rates come down a little bit, they have come down a little bit, that might inspire more buyers to get into the market. But it's tough. I'm sorry that you had that experience. You know, in due time, something will come on that you love and you will find it and you will bid on it.
Bess, I want your thoughts on a trend we're continuing to see grow, and that is corporations backed by private equity groups now buying up single-family homes. So folks are not only competing against other would-be home buyers, they're competing against the big guns, these institutional investors. I saw this one report from MetLife Investment Management. Get this, they say investors, institutional investors, may control 40% of the single-family rental home market by 2030. How's the little guy supposed to compete with that?
That's really hard. I don't know. And we have housing shortage in the United States.
But the thing is, I see this all the time in the very affluent suburbs of America. You have these private equity companies coming in and trying to buy out homes. You have BlackRock that tried it too. Now, was it BlackRock or Blackstone? I think it was BlackRock. But what is happening is that they're bidding up the price, and their model is rent them out. Well, they have to pay insurance. They have the cost of the property. And what they're noticing, they can't rent out where they're making money because they bid up the price. So now they're trying to sell off their inventory. And so now the prices are going back down. They bid it up, and where in some regions, you may have had 25% increase in asset price for the property. And now it's coming back down. So in the long term, these companies are coming in and bidding the home buyer, the normal home buyer, out of the market is only, yeah, that's true right now. But what's going to happen is that because of their high bar of break even, they're going to have to sell the property at a lower rate, and there'll be bargains for the average consumer. You may have to wait in certain markets. So it's starting to shift. This accumulation of inventory by these high-powered companies to buy homes and bid them up is starting to turn, and they have to unravel some of those assets that they purchased. So it's a little bit more complex, all right? This has been going on for a few years, but they've noticed that, yes, we're moving towards a rental economy, but because they bought so many of these assets in such a short amount of time, and they bought at any cost, that their break even sucks, and that it hurts their overall performance, and they have to sell some of the inventory, and so it's going to be suppressed. The prices are going to go down, and so there's going to be, if you wait it out and you pay attention, you'll get some good deals in certain markets. All right, let's see here. All right, let's listen into CNBC.
Steve, instead of talking about the case for a moment, I'd just like to kind of understand from your perspective what may happen to Cook, regardless of what happens in court today. I guess in the sense of, I mean, she's suing Powell now, right? Does Powell have to open an investigation regardless? I guess I wonder, the same way they did with Clara or with Kaplan and the like. And would that conceivably result in her leaving the Fed anyway at some point as a result, even if this goes nowhere in terms of what the Trump administration is trying to do right now?
So, David, unfortunately, your attempt to not talk about the case gets you right back to the case, which is one of the issues here is whether or not and how much it should matter to the Fed what happened before Cook joined the Federal Reserve Board. Yes, he can refer this to the IG, but the question is going to be, this is stuff that happened before she got to the Fed, and so whether or not that becomes an issue it is a little unclear. That's certainly one of her arguments, that you can't fire somebody for cause, which has to do, they say, with malfeasance or neglect in office for something that happened beforehand. I suppose there are issues about appearance and those questions, and whether or not this case is ultimately, by the way, she has not been charged. For many, the evidence is very, very convincing, but she has not been charged, and we've also been unable to confirm that any of these allegations or referrals from FHFA to the Justice Department, whether or not they've ever spoken to Cook, and whether there is an explanation. We do not hear an explanation, really, from the Cook camp, because they don't want to argue the allegations. And if I could, David, I want to take a step back and say, why are we spending so much time on this? Why is this so potentially important? Because on the one hand, we have the independence of the Fed at stake, and that's from the Cook side. From the president's side, they're saying this is in part about the power of the executive to fire someone. So let me show you what the Cook camp, I'm summarizing this myself. They say this case is about the president's power to fire a Fed official over policy, aka Fed independence. They don't think this is about the allegations, which they point out are not proven. Going to the president's side, he's saying this is about the president's ability to fire someone for cause because he has the authority to do so based on judgments and in the allegations. He says this is about the allegations and the unopposed charges. This is very important, David, because one thing we've heard is that we know that Cook has not
defended herself specifically against the charges. In the filing this morning by the government, they very much use that against her and say, hey, she's had 5 days to defend herself, hasn't done so, therefore she's unlikely to win the case.
Right. I guess from the market's perspective, Steve, the idea of whether or not she's gone by February 26th, I believe, isn't that when regional presidents need to be renewed? And that could figure importantly as well in terms of President Trump's ability to replace them and basically have a lot more control of the overall board.
Yeah, that's a big, big point here. If you think about it, David, I mean, I think of these Fed presidents as upstanding people, but here's the situation they're in. If the president gets a majority of the Federal Reserve Board, and let's say one of them or two of them or three of them or five of them don't vote for rate cuts consecutively between now and when their job is up in February, well, the majority board of Trump appointees could decide to get rid of one or more of the presidents come February. So that's kind of hanging over their head. I'm not suggesting they'll act that way, but certainly that does raise question about the independence of the Fed and why this whole notion of the president hammering for lower interest rates, suggesting he has authority over this is a critical point.
Really fascinating to imagine this sort of tension.
Please go to my store, the-studio-reykjavik.com, and get the NAD+. NAD+ will help to repair your DNA damage, bring up energy levels, and NAD+ will also help to protect your neurons. Super important. If you're age 40, you need to start, or older, you need to start protecting your neurons. Ubiquinol, the most bioavailable form of CoQ10 that you can purchase. There is nothing better than what I have in my hand. If you're taking CoQ10 and it's not this, you're not getting the best one. So please go to my store and get Ubiquinol. Ubiquinol will help soak up free radicals because it's an antioxidant. It'll help the health of the mitochondria to help increase your ATP levels and protect your neurons. Stack them together. Protect the neurons. This stacks really well with C60 and Clarity Factor. So please go to my store, the-studio-reykjavik.com. Use discount 5. You get $5 off any order. If you spend $100 or more, you get a free gift until supplies last.
Strength, build a stronger tomorrow with BAM Mutual. And we know that municipal bonds have been having a pretty good run. Lots of strong demand, record issuance out there. But where do we go from here? We want to bring in our resident expert, Elizabeth Remberg, for more. She covers municipal finance here at Bloomberg. Elizabeth, good to see you. So you say that despite all that strong demand and record issuance, the muni bond market could be in for a challenging September. Why do you think that?
Yeah, that's right. So August was a relatively good month for munis. We had a lot of coupon payments that were bringing in some reinvestment flows, which allowed investors to really put that back into the municipal bond market and meet that really high supply that we've been seeing all year. But those coupon payments and reinvestment is going to slow down in September. Meanwhile, supply is supposed to be just as high, those high levels that we've been seeing all year. So there might be a little bit of a supply-demand mismatch in September that will drag on returns.
So you mentioned the coupons will slow down. Why is that?
That's just a very cyclical thing in the muni market. It's just when the bond calendar has those coupon payments coming back to investors, sending that money back.
Is the demand there, though, to match the record issuance at this time, or is that starting to wane, or are folks looking elsewhere within the bond market?
I think that that's kind of been the question all year long. As we've seen, last year we had really high supply, and this year it's even outpaced those record levels in 2024. And what I've been hearing from folks is that there does tend to be a lot of demand in the shorter end of the curve, but when we get out to the 20-year, the 30-year, that's kind of where demand falls off for those bonds, and that's why we're seeing those bonds look very cheap relative to treasuries and to underperform the U.S. government debt market.
Elizabeth, I want to get into some examples because this is where I always like find those little nuggets. So there was this article that you pointed to, University of California, Los Angeles, working to restore federal funding. How does that play into the muni bond market?
Yeah, that is an interesting one. So the Trump administration, in their efforts to reform higher education, This was the first time that those efforts came to a public university, and they took away almost $600 million from UCLA, one of the campuses of the University of California system. And California Governor Gavin Newsom has really come and said, bring it on to the Trump administration, and has indicated that he wants to fight back against this move from the White House. And the University of California is one of the biggest issuers in the municipal bond market. They had a $1.5 billion bond sale slated for this month that ended up being pulled. And our sources pointed toward just the really challenging disclosure requirements of municipal bond issuers, and how those disclosure requirements would have been really hard to meet in the face of an impending legal fight. So that's one example of how we're seeing headlines out of Washington impact the municipal bond market.
And another headline out of Washington, Elizabeth, there are these federal cuts to Medicaid, right, that could actually really wind up hurting rural hospitals, because those systems depend on the money raised by these muni bonds to do things like build new facilities, right, get new equipment for the hospital. Tell us the impact this might have on rural hospitals.
Exactly. That money is very important to the rural hospital health system. The cuts in the One Big Beautiful Bill Act are estimated to take about $137 billion out of rural health systems over 10 years. And investors I talked to say that rural hospitals were already a tough sell when it came to their bonds. You know, their patient bases tend to be very poor. They don't have those lucrative elective surgeries. There's not as much of a chance that a bigger, stronger hospital system is going to acquire them. And now we're taking away another big part of their revenue in these Medicaid reimbursables. And so some investors that I've talked to have said that this has just blown up any chances that these health systems had, and that could really hurt their access to the municipal bond market.
Okay, in the last 30 seconds, do you see how have markets been flowing so far?
Well, today I was actually just looking, when I heard about all the red on the screen, I was just taking a second to look over the muni curve. While we're seeing those stocks sell off, there's been no changes that I'm seeing in the curve. So that's what I'm today.
All right. We're going to leave it there. Elizabeth Rembert from the municipal finance. She covers municipal finance here at Bloomberg. Thanks.
Please go to my store, the-studio-reykjavik.com, and get lignans. Lignans will bring down inflammation, help your endocrine system, help your immune system, soak up free radicals, because it's an antioxidant. It stacks really well with turmeric and ashwagandha to help with your cardiovascular system, in addition to helping your endocrine system and your immune system. Ashwagandha root brings down cortisol levels and helps you to control your blood glucose levels. This will help to bring down inflammation, help your immune system, and by bringing down these levels at the vascular level, you're helping your cardiovascular system. Because if you have elevated cortisol and elevated blood glucose levels, you're going to cause damage to the intima of the blood vessel, and eventually you'll start having plaque buildup. You don't want that. So you want to take ashwagandha root, stacks well with turmeric and the lignans to help with the cardiovascular health and your immune system. So please go to my store, the-studio-reykjavik.com. Get the ashwagandha root, the turmeric, and the lignans. Use discount 5 to get $5 off any order. Make sure that you follow these protocols, these stacks, take them regularly, and you're going to notice that you're getting healthier. So please go to my store and follow my advice.
Well, one of the things I did immediately upon becoming the acting chairman was to name one of my fellow commissioners, Hester Peirce, who's spent an awful lot of time talking to the crypto community. You're going to be in charge of our efforts, leader of our crypto task force, and that now under our new chairman, Paul Atkins, has now pivoted into what we call Project Crypto. We are working side by side with our colleagues at the CFTC. They announced what they call Crypto Sprint. So we're really anxious to get some things done.
In terms of getting things done, there is a sort of fever pitch of innovation going on, and a lot of that is to do with the perhaps adoption of new ETFs around things. I'm interested in, for companies, several treasury companies that are building up crypto as their assets. or indeed new ETFs springing up. Are you comfortable with the pace of innovation as it is? Are we going as fast or too fast from your perspective?
Well, they are part of the innovation equation, so to speak, but they're just only a part of it. We've got a lot more to do. You know, with these companies, the SEC, in its 90 years of existence, has always been a disclosure-oriented regulator. That means we're not supposed to put our thumb on the scale of whether an investment is good or bad. What our concern is whether or not you're telling the truth when you market and provide the disclosures with respect to these products. So they can put crypto in their treasury. They didn't disclose that. They didn't disclose the risks about that. They didn't disclose what their intentions are as in accordance with our rules and regulations. But there's so much more that we need to do.
Well, important for those companies that are looking to be treasury companies, or those that want to put Solana, for example, or XRP, or even Dogecoin in an ETF. How soon will they know whether those tokens are indeed deemed securities or not?
Well, we've already put out a number of statements from our staff in the Division of Corporation Finance, which says some things are not securities. Now, we are working on, as Chairman Atkins said, as part of his Project Crypto Kickoff, provide some commission-level guidance, what is and is not a security when it comes to crypto. It is tied up in a decades-old Supreme Court decision called Howey, SEC versus Howey, as to whether or not to use an investment contract. The good news is that it is what I view as a principles-based test. Is it an investment of money in a common enterprise with the expectation of profits from the efforts of others? How do you apply that in the crypto space? That's what we're looking to do.
In the next month?
Can't talk about timing, but what I can say is this has been part of the Crypto Task Force's efforts from day one of this year. You know, we took a position which I objected to. I put out many dissents objecting to it with this idea that every crypto, with the exception of Bitcoin, which is what our former chairman Gary Gensler testified before Congress, was a security. No, we have this whole framework. We weren't applying it properly. Said we're going to do this. That was what the Crypto Task Force started doing. That's why they held this series of roundtables. In fact, that was the very first roundtable, was talking about what ought to be in and outside the scope of this.
We're speaking with Mark Ueda, Commissioner of the United States Securities and Exchange Commission. I'm interested in, previously, it was sort of regulation by enforcement, and you said you don't want to put your thumb on the scale in this way. But how many crypto enforcements are ongoing at the moment? Can you tell us in terms of the amount of investigation still going? I know that, for example, Unicoin is being sued, for example, and that happened in May.
We have a number of ongoing investigations and actions related, and I would say are crypto related. We have an awful lot of what one might call fake crypto, which is somebody who purports to be involved in crypto, but it is nothing more than the types of Ponzi schemes and other scams that we have seen since probably the creation of currency.
How many staffers are looking at enforcement now compared to the prior 4 years?
Well, what we've done is we still have a unit, although we've changed it from the cyber and crypto unit to be more broadly focused on technology. We have an enormous number of tips, complaints, and referrals that come into the agency every year. In fact, I think we're on track from nearly 45,000. A number of them relate to crypto, so we deploy staff appropriately.
And you said you're working in lockstep almost with the CFTC. How is that relationship going at the moment?
We've got a great relationship, and it's one of the things that was very important on the financial regulatory front, not only between us and the CFTC, but us with Treasury and the banking regulators about how to address crypto. You saw this with the President's working group on digital assets. They issued a report last month. This has been something that has been, I think, really all of the relevant regulators in the executive branch are all communicating with each other and all coordinating with each other to make sure that we can make this effort successful.
Now, the SEC does more than just look at crypto. And I'm interested in, at the moment, you're currently suing Elon Musk, and that's to do with alleged violation of securities law about when he was taking a significant chunk in Twitter. He had owned about 5% in excess of, and he was meant to make that declaration. Many would say he didn't do it quickly enough. He wants that suit dropped. Should it be dropped?
Well, I'm not going to comment on any particular investigation or enforcement action that we currently have. But what I will say is, we have these Schedule 13D and 13G requirements out there. One of the key parts about whether or not you can file on a 13G is whether or not you are a passive investor. And one of the things that we did take action is there are a large number of very influential asset managers that hold significant chunks, well above 5% of a company's stock. Question is, what sort of relationship should they be having that requires additional disclosure? If they're asking or directing the company that says, you need to do the following things, for instance, on climate change, you need to hit net zero goals, you need to have a plan of how you get to net zero, you're no longer a passive investor. That requires additional disclosures of some form, because we have concerns whenever or at least you say Congress passed laws telling that we have really large shareholders, more than 5%, which perhaps doesn't sound a lot, but in the real world, that is quite a bit for a company, that they need to provide the appropriate levels of transparency to their discussions with company management.
Well, plenty more on your agenda other than just the Elon case and indeed just crypto. It's been wonderful having some time with you. We'll let you get back to the day job. Mark Lager, of course, the Commissioner for the United States Securities and Exchange Commission.
And welcome back to Bloomberg Intelligence. I'm Alexis Christoforous, along with Lisa Mateo, on this final day, trading day of the month of August, where we've got some red arrows. The Dow is down about 170, the NASDAQ off about 240. We've got the S&P down about 45 points. And one of the big movers today is Caterpillar, mover to the downside, that is, off nearly 4% right now. It's warning investors that tariffs are expected to have an even greater impact, take an even bigger bite out of its bottom line, expected to cost CAT as much as $1.8 billion this year. Let's dig into it a little more with Christopher Ciolino. He is Bloomberg Intelligence Senior U.S. Machinery Analyst. So what is it about this report that's got investors in a tizzy?
Well, you're right. I mean, tariffs will be a bigger cost headwind this year, more than CAT previously expected. And the revision really seems to be driven by additional clarifications around the Section 232 steel and aluminum tariffs and some of the reciprocal rates on India. As you alluded to, CAT thinks these tariffs could be, up to a $1.8 billion impact in 2025. That's up, $200 to $300 million versus their prior view, so a little bit higher. So, even though that we're looking at these incremental costs this year, we think it's pretty easily digestible for CAT, and probably represents, the peak headwind that we'll likely see. They really haven't implemented significant cost mitigation or pricing actions yet. I suspect you'll see more of those measures in 2026, which can ultimately offset these impacts.
So, Chris, is it steel and aluminum? Is that the main focus?
Yeah, we think so. So we did get an update on the Section 232 tariffs for steel and aluminum that expanded the coverage to, I think an additional 400 different products. So, we had CAT report earlier this month, and we had that subsequent update. So I think that's probably the big driver behind it. Obviously, heavy machinery companies use a lot of steel and aluminum. It's their largest input cost. So that certainly does move the needle.
We're talking about headwinds, but what about tailwinds? Any of those for Caterpillar?
Yeah, despite some of these near-term cost headwinds, I don't think it really ultimately changes the narrative here. We're still quite optimistic that earnings are going to bottom this year. There's a number of cyclical and secular tailwinds that we think are going to drive higher earnings in 26 and 27. The backlog is sitting at a record high. We've seen very solid order trends these past, 4 quarters. And dealer inventories remain at pretty healthy levels considering the softness in the broader economy. So all of these are really positive leading indicators for Caterpillar.
And Chris, you followed this company very closely. So when we have an economic slowdown, what segments of Caterpillar's business tend to hold up the best?
So right now, the segment holding up the best would be their E&T or energy and transportation business. And really, I think the big driver behind that is power generation, particularly on the data center side. Those are much longer cycle products, have very extended backlogs for many years. Caterpillar's adding capacity there. So we've seen that business hold up very well. On the flip side, the more cyclical construction industries business is probably the one more harder hit. And also their resource industries business, which is a lot of mining equipment, that's been a little softer as well. But, I think, if we're looking at a lower rate environment moving forward, we're certainly a little bit more optimistic on some of the growth prospects in those two businesses moving forward.
All right, Chris Ciolino, Bloomberg Intelligence Senior U.S. Machinery Analyst. Thanks for coming on and talking a little cat. Let's get a Bloomberg Flash now with Charlie Pellet.
Indeed, Caterpillar shares down 4.1%. The Dow, the S&P, Nasdaq, they're all in the red. We are on track for a losing week ahead of a long holiday weekend. The S&P now down 45, retreating from Friday's record back below 6,500, 64.56 where we stand right now. That is a drop of 0.7%. We've got the Dow Industrials down 171, down 0.4%. Nasdaq down 246 for the Nasdaq Composite Index, a drop of 1.1%. On Mag 7 Index down 1.3%. NVIDIA, of course, a part of that. NVIDIA right now down 3.3%. 10 years yielding 4.23% with the 2-year, 3.62%. Could not ignore the move in Bitcoin today, down 3.1%. 108,490 on Bitcoin. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, thanks so much, Charlie. I want to talk about another big mover this week, this year, this past couple of years, NVIDIA and AI. It was out with earnings this week, and it impressed with more proof that AI spending continues to be strong. I want to talk more about AI in the real world with Ben Brand. He is founder and CEO of the software company SigTech. He joins us from London. And Ben, thanks so much for being with us. Before we get into SigTech and what you do with AI agents, we'll get into what all of that is. I just want your thoughts on NVIDIA's earnings report this week.
I think we are seeing unprecedented demand for AI services, AI inference. If you look at the, not only the hyperscalers purchasing GPUs and building data centers, it's keep going up. And if you look at the consumptions of tokens by large language model providers such as OpenAI and Google and Anthropic, it's growing at 100% every 6 months. So the adoption, the usage, the consumption is all going up. The trend, there's no reason why it's going to slow down or certainly not stopping.
Ben, we've heard a lot about different types of AI. Gen AI is a huge one. I mean, I know everyone's on the ChatGPT or whatever else you have. But do generic AI tools, they can help out in a lot of fields, but what about financial institutions? I mean, you focus more on custom AI, is that correct?
Yeah, we focus on building entirely bespoke and custom AI agents for customers in capital markets. I think people now, hundreds of millions of people have used ChatGPT, so we all have a good idea of, what a chatbot can do for us, which is extremely useful. But when it comes to businesses, there's an increasing gap between what the large language models are capable of and what actually value users in businesses are getting out of the applications using the same models. The large language model capability has been improving dramatically. Frankly, probably the most the improved applications, unfortunately, have been restricted to only a few areas, mainly about writing code. That has been the killer app outside chatbot. In finance, the difficulty is actually there are many different reasons why the application is not delivering the kind of potential we are expecting. One of the reasons is in finance, we use a lot of private data. The large language models are mainly trained on public data. Then there's the question of how to converting the vast corpus of financial documents in PDFs, in Word documents, in Excels, into the right formats that actually can be effectively used by large language models. Any error in this data conversion, document processing pipeline will immediately result in very poor qualities downstream. And in other areas in finance, we crunch numbers, and the large language models are very bad at crunching numbers, right? And it's probably the most expensive calculator we can think of. So to make large language models work in finance, we have to provide a very wide range of financial tools These tools can be softwares, can be APIs, can be desktop applications. Then we have to train models to use them. And there are other challenges too. Yeah, that's why everything has to be bespoke.
Ben, we keep hearing that AI is going to be a job killer. And we're already seeing it, frankly. A lot of, entry-level positions being taken over by AI. That means a lot of recent graduates from college are finding it even harder to find a job. And unemployment amidst that demographics about 6% right now versus a little more than 4% for the rest of us. So how do you see the future of work looking, and how does AI play a part?
I think wherever there's unprecedented new technology coming along, so transformative and so disruptive, like AI, but previously there was internet, there was industrial revolution, there was the invention of airplanes and cars. I mean, inevitably some jobs will be killed, I guess you can say that, but there will be new jobs created. I think the key here is to understand fundamentally what AI can do and what AI cannot do, and what makes us, by us I mean humans, special. AI is very good at doing repetitive, non-creative work, non-creative knowledge work. Humans, we are uniquely equipped to be creative and imaginative. And also, by the way, you probably know that AI is really bad at telling a joke, a good joke. And there's a reason for it. Because AI is trained to predict the next most likely word, the word by word, and to deliver a good joke, the punchline has to be surprising and witty. So
it's as simple as irony. It doesn't understand irony.
Inspiration, they have to have new experiences, imagination, and creativity. I think that's probably a good role model for the future of work look like. We can spend more time on being imaginative and creative, and frankly, more intellectually satisfying, and less time on things, frankly, we don't wake up and be excited about.
All right, Ben Wren, founder and CEO at the software company SigTech, talking all things AI. It's fascinating and continuing to change. Thanks so much, Ben, for being with us. We appreciate it. And coming up here, we're going to talk more Lisa Cook, right, Lisa? Mateo, different Lisa. Yeah, we're gonna find out if a judge in D.C. is going to grant her injunction against President Trump. She's saying, look, you can't fire me. It's illegal. We're going to see if we're going to get any kind of a ruling today, and what that battle, that court battle, might look like. We're going to talk it over with Mike McKee, Bloomberg International Economics and Policy Correspondent, who just walked into the studio. So hi, Mike. We're going to talk to you on the other side of the break. And also, let's not forget, we're going to be wrapping up the month of August here on Wall Street. Mike, do I even have to say that volume has been quite low? I mean, it's the day before the 3-day holiday, Lisa. I know. What do we expect, right? Okay, but exactly. so we're lower on the day. I don't know how much you want to read into it because again, volume is so light. But we're gonna take a look at the Fed, the markets, all that and more when Bloomberg Intelligence comes back right after this.
YouTube Premium is ad-free YouTube and video downloads. So you can watch cooking shows as you eat airplane food. YouTube Premium. It's way more than ad-free. Try 1 month on us.
Well, I think that we can just quickly cover it and all go home because that was largely as expected, right, this report. But seriously speaking, I think that today's report doesn't add much in terms of the new information. We already knew that consumers are still holding up. They are spending on goods. So goods spending increased by 0.9% in July, and we spend less on services. So that is telling me that consumers are becoming more choosy in what they have to spend on. They are stocking up again. Look at the advanced trade report that also came out along with the data on inflation. We saw a huge increase in imports. So I think we have some kind of a deja vu here because, we're stocking up again ahead of the new set of.
Elena Shultever with us with the conference board, the senior economist. There, Elena, let me ask a dumb. It's not like Damien would ask this. I'll ask a dumb question. On a scale of 0 to 100, where we say the tariffs have been passed on to the consumer in America, where are we on that continuum? From 0 to 100, are we like at 10, where it's barely in effect, or 50 midpoint, or is there now becoming a huge effect of tariffs on our listeners and viewers?
I think we're in the early stages of that, and Sarah was referring to that as well earlier. I think we're in kind of like a 20 to 30% on that scale probably. Look at what is happening. So today we get an expiration of the de minimis tariff exemption. So that alone, according to the conference board research we published earlier this year, will add a few tenths of a percent to PCE inflation later on this year. I think that is an important thing as well. So I think that, we stocked up inventory with cheaper inventories earlier this year. And now it's just the time when we're going to start seeing inflationary pressure. So I think they will continue to build into the end of the year and going into the next.
Sorry about that. Elena, I know we could stick to the U.S. here, but I'm going to talk about Canada here because this GDP print was pretty surprising to the downside that we just got at 8:30 this morning. And, we're seeing growth kind of, coming in a little bit across the board. And I'm seeing central banks literally across the board from Mexico to the UK, Poland perhaps next week, the Philippines this week. They're cutting rates. Are we missing something that other countries are seeing? Is growth slowing more quickly in some of these other nations? And is that why the central banks are acting so aggressively?
Well, you have to, when you disrupt the system, and that's what we see, right, with all the new policies and policy actions, something will break somewhere, right? So, and you have to react to that. I just don't think that in terms of the U.S., we are, heading into some kind of a downturn at this point. I think growth in the U.S. is still solid. Despite all the disruptions, and it's a very tough choice for the Fed what to do the next meeting and going forward.
We continue with Elena Shultever, the conference board. Bond market showing higher yields, 10-year up a solid 3 basis points, 4.23%. 30-year bond not at 5%, 4.91%. Equities do better than before the 8:30 report, moving from negative 25 futures about now negative 18 futures, the VIX 14.56. With Elena Shultever, Damien Sassar. Damien?
Yeah, so Elena, look, we've been talking all morning about the impact of inflation on growth, the impact of inflation on pretty much, some of these local economies, not just in the U.S. but abroad. But what I really want to get a sense of, what are you seeing on the ground here? Just real economies, the real purses in the pocketbooks that are being, do you see consumer discretionary spend coming down here in the U.S., or is there potential for it to surprise to the upside still?
I think we see a slowdown, and based on our conference board consumer confidence data, you do hear a lot of concerns about inflation and how that will impact consumers going forward. So look at this report again this morning. So services were pretty weak, even though goods spending rebounded from its tepid pace based in the second quarter of this year. So that tells me that, consumers are really facing tough choices. They have to spend more on food and things like that are necessities, and they have to forego what could be a discretionary spending, like going to Disney World or other things.
Hello, my name is Adam Ferrari, Chief Executive Officer of Phoenix Energy. I look forward to you joining us at our next investor webinar.
This is due
We
to
can
the
drill deeper
long-term
into our 9 to 13% annual
And the stock
interest rate
rate here in the
bond
US was almost more
and see how our
important
company has
to
become an emerging leader in the oil and gas industry.
To the extent that you can read today's market's reactions into this case versus NVIDIA's earnings, it hurts the Fed's credibility. And I think most people on Wall Street would agree that the real question is, does this suggest that then the president can do whatever he wants and force the central bank to make policy based on what's good for the president rather than what's good for the economy? The government's argument has been that having somebody who may or may not have committed some sort of mortgage fraud on the Fed is more damaging to credibility, but that doesn't seem to be an argument that flies with people outside of the court.
I can't have Michael McKee in my studio and ask about eco data. Okay, so PCE out today, kind of in line with expectations. Did you see any tariff pass-throughs?
No, but well, yes and no.
One of those again.
One of those again. But you know, economists, we have two hands. The pass-throughs were already in the CPI and PPI, and those data get incorporated into the PCE. So yes, there was some tariff pass-through, but it wasn't something new that we hadn't known about before. And that's why the numbers come in on the forecasts, because by the time we get to this, these are July numbers, and this is the 29th of August. By the time we get to this, they've managed to put together pretty much all of the data that goes into the PCE report, so you know what it's going to be. So there's no surprise here. The bottom line is that inflation is still rising, and it is still rising at a somewhat elevated pace. And but not so much that you couldn't argue both ways in September. So we look forward to further data, basically.
Mike, we got about 30 seconds, and I've got to look ahead to next week's jobs data, especially after the huge revision downward. We've got somebody new at the head of the Bureau of Labor Statistics. Will this market believe the numbers that are put before them next Friday?
Yes, because there really wouldn't be any change. We've got a temporary person at the Bureau of Labor Statistics who's done that job before and is well known. So there's no credibility question. And really, there's not a lot of credibility question for the entire jobs report. Chris Waller made that clear last night in his speech. This part was overlooked, but he gave a strong defense of the BLS data and suggested why we saw big revisions, and he didn't see anything nefarious in that.
And he's calling for a quarter-point cut come September 17th. Mike McKee, Bloomberg International Economics and Policy Correspondent. Always great to have you, and great to have you here live in the studio.
Mike's everywhere.
That's a treat. He's in Wyoming, he's in DC. Where in the world is Mike? Thank you so much for being with us. Quick check of the markets shows lots of red. The S&P down 46, down 200 points, so near a session low. NASDAQ down about 280, but for the month we are up. The Dow up nearly 2%, S&P up 1 1/3, and the NASDAQ up about 1.5%. This is Bloomberg Intelligence. I'm Alexis Christophers along with Lisa Mateo. Stay tuned because we've got Balance of Power coming up here next on Bloomberg. Yay! Rock on!
It does take us to our talk of the tape. Where does this market go from here following the NVIDIA clearing event? Let's ask Ed Yardeni, the president of Yardeni Research, and Gabriela Santos of JP Morgan Asset Management. Both, as you see very clearly, are with me at Post 9. It's nice to see you both. All right, Ed, so we've gotten it all out of the way, right? We got all the mega caps, and now we got NVIDIA. What do you make of the way the market's now sort of reacting, digesting, and feeling?
Well, it's feeling like a slow motion melt up, right? I mean, it just keeps going higher and higher, making new highs, and the earnings story has been great. I mean, in the first quarter, we had a much better beat than was expected, and the same thing happened in the second quarter, which is remarkable when you think about all the uncertainty, all the turmoil from tariffs, and yet earnings have been great. And so, I've been talking about the roaring 2020 since that's since 1920, it's 2020. We're making a comparison to the 1920s. And so far, so good. I think the market is discounting a technology-led productivity boom and with better growth, inflation staying down, better profitability, and real wages going up.
And rate cuts.
And possibly rate cuts. I don't know. I mean, it's not a done deal yet, right? I mean, it seems like everybody's anticipating it'll happen.
Well, the market, just don't break the market's heart in. I mean, because the market has moved on thinking that this is
the market loves Fed puts. So if we can get a Fed put and maybe the economy really doesn't need it, I guess we'll get further meltdown. But look, I think that the outlook is that we're in a bull market, tremendous amount of buying power, lots of buying on the dips. And so I think it continues. I'm using 6,600 now by year end and 7,700 by the end of next year and 10,000 by 2029, not 19.
Yeah, don't start talking about that.
No, we don't want to go there.
Yeah. Gabrielle, does this match up with how you think about things right now?
Yeah, we very much think for the rest of the year, next year, more all-time highs, normal upward climb of the market. I think what's been interesting from this summer has really been the rotation within the market. So clearly these mega cap tech companies are doing very, very well. Incredible earnings. It's just the magnitude of the earnings beats have been decelerating. And so you're seeing a nice rotation within the AI theme. To also include software infrastructure and, of course, to include physical infrastructure, including utilities, industrials. So it's already moved on to that new phase of the theme, which is really encouraging. One of the things we ask ourselves about the fall is whether this other rotation, this one from tech to cyclicals, continues. And that's where we say, probably not. It's much more of a sugar rush than an actual protein boost.
Why?
Like you've seen elsewhere.
Ed just went down the list of the menu, and it sounds like you're eating a lot of protein in the months ahead. Why is it just a sugar rush?
I think it makes sense to have a bounce off the lows, low expectations for the group, a lot of doom and gloom, especially in April. But if you think about it, next year, we personally just expect a re-acceleration due to tax rebates from the fiscal bill, but then a deceleration again to settle around normal growth patterns. If you think about Fed cuts, we think they're very gradual and just getting back to normal from 4 to 3. And then lastly, if you think about a lot of these cyclical sectors, consumer discretionary, small caps, autos, still very vulnerable to margin pressure from tariffs. And that story we don't think has completely played out yet.
How about that?
Well, look, I think that the resilience of the economy has been a big surprise to most people. In turn, that's been confirmed by the resilience and better than expected earnings we've got. So I'm actually scratching my head a little bit of wondering why these profit margins are holding up so well. And the only answer I can come up with is the productivity numbers might actually be stronger than expected. We could have upward revisions in that area. We just had real GDP in the second quarter revised up from 3 to 3.3%. But all in all, I'm thinking that the market is clearly rotating, as Gabriella said, and I think that we're seeing also rotation into the mid caps, small and mid caps, and the earnings have been very disappointing there. But I think that to the extent that we've been recommending overweighting information technology, communications, industrials, and financials, and all of those have worked very well in the large cap area, we would start rotating into some of the mid caps and small caps in those 4 sectors.
What? It's a rare thing when someone you've been with for so long finds a way to.
For the on-the-ground view, live report from Bloomberg's Tyler Kendall. She's been there since the sun came up this morning with insights ahead from Bloomberg's Supreme Court reporter, Greg Stohr. Discord at the Fed, uncertainty over tariffs, all adding up to push gold prices higher. We're going to get into that with Mike McGlone at Bloomberg Intelligence, and we'll talk markets as well. And as former President Barack Obama jumps back into the political fray, we'll have analysis from our political panel. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are with us. on the Friday edition. Let's get to the trade right now. Charlie Pellet starts us off with Wall Street live from New York. Charlie, the last trading session of August.
Indeed, the final trading session of the week, and we have got the Dow, the S&P, NASDAQ, all declining, on track for a losing week right now on the S&P. Right to the numbers, S&P down 47, 64.54 where we stand. That is a drop right now of 0.7%. A lot of red there with the Dow Jones Industrial Average down 168, down 0.4%. NASDAQ down 271, drop there of just about 1.3%. The Max 7 index lower today by 1.4%. NVIDIA getting a lot of attention this week. It is lower today by 3.5%, certainly weighing on our index. We've got the 10-year 4.22%, the 2-year 3.61%. Spot gold up $30 the ounce. Miami Mike McGlone's going to have a whole lot more on gold coming up on Balance of Power. 34.47 right now on the precious metal, up by about 0.9%. West Texas Intermediate crude down 0.8%, 64.08 a barrel on WTI. The next Fed decision comes this September 17th as Wall Street keeps an eye on incoming data. Michael Purvis is the CEO and founder of Tallback Capital, and he said Fed Chair Jay Powell certainly is in a tough position.
This job is hard without having the president of the United States, be pushing on you every day, right? So there's a lot of strange currents in the data, and I think Powell's just kind of reading them as they come.
Michael Purvis of Tallback interviewed this morning on surveillance. Key economic data this morning, so-called core personal consumption expenditures price index, PCE, which excludes food and energy items and is favored by the Fed, was up 0.3% in June. Earnings news, Dell now slumping by 8.2%. Also after earnings, Marvell, it is down 15.9%. Balance of Power continues right now. Back we go to Washington, the Friday edition. He made it. Here he is, Joe Matthew.
Yeah, nice to meet you here on Friday. Charlie Pellet, thank you. We'll get back to Charlie in about 15 minutes here for the latest on the Friday trade. Welcome to the threshold of the weekend and the Friday edition of Balance of Power on Bloomberg Radio, satellite radio channel 121. You can watch the radio on TV by going to YouTube, search Bloomberg Business News Live. An hour from now, we'll welcome our global television audience to the conversation as we're just getting started here on a Friday, and we have a lot to cover. Breaking news from Washington right now. You picked the right time to join us. As always, it happens at high noon. The hearing has just wrapped up while Charlie was talking, finishing with no ruling from the judge. This, of course, has to do with Fed Governor Lisa Cook, her pursuit now, her legal pursuit to stop Donald Trump in his tracks as he tries to fire her and become, in fact, the first president to fire a Federal Reserve governor. We saw lawyers talking to the judge for some time. It was about a 2-hour-long session, and we want to get right to Bloomberg's Tyler Kendall, who started her morning out in front of the courthouse before the lawyers and the attorneys even arrived. Tyler's with us right now. No ruling, Tyler. What else can you tell us?
No ruling. And Joe, you really hit the nail on the head. You and I could not have timed this better because at this point it was just about 2 hours of arguments from both sides, Lisa Cook's lawyers as well as the Trump administration. And keep in mind, today's hearing really had to do with Lisa Cook looking for this temporary restraining order, this TRO, which would essentially allow her to retain her seat, at least on a temporary basis, while the rest of the case works its way through the legal system. Now, there's a few different dynamics we could look into here, that she's expected to file for a preliminary injunction, which would be a little bit more long-lasting. But something that we picked up from Cook's attorney earlier, Abby Lowell, telling the judge that they are not expecting the Fed to act until the court rules. And that opens up the question here on whether or not you actually need to have this TRO in order to keep Cook on for the time being. However, we did hear from her lawyers at the end of this hearing just now saying essentially that they want to see a little bit more of a cushion. They want to make sure that there cannot be any attempts to remove Cook from this position, to maintain the status quo, was the quote, while the broader legal fight ends up playing out.
So Judge Cobb is apparently going to give the lawyers here on both sides a chance to supplement their filings. But we don't have apparently a schedule, Tyler, and there are still questions about what exactly Lisa Cook is able to do. There was reporting today that she has access to her email or electronic files. Apparently she has not shown up in the building, at least, since the president has threatened to have her fired. How long could we have to wait on this?
Oh, Joe, that's one of the big questions here, though we are expecting the judge to take some sort of action in at least the coming days. But keep in mind, this is just the first step. We are on a pretty long legal battle here, though perhaps because President Trump is involved, we could expect to see this a little bit more expedited, as we are expecting the case to go up to the Supreme Court. And really what's at issue here is this idea of cause. And we talk a lot about cause, and we're going to keep talking about cause because that is the question. Under Section 10 of the Federal Reserve Act of 1913, it says the president can remove a Fed governor if there is sufficient cause. Lisa Cook is now arguing that there is not sufficient cause, and she is suing President Trump, saying that he violated this law. Joe, it's worth pointing out that we did hear from the Trump administration earlier today in a court filing. President Trump reaffirmed this idea that they believe it is basically up to the president to determine what qualifies as cause. Then I will also quickly add one other nugget that we really should be looking at here, which is this idea of due process. And President Trump, in this court filing, the administration is essentially saying that they gave Lisa Cook a chance to respond to these allegations, that there were 5 days between him posting on Truth Social calling for her to step down and then him ultimately posting that notice with her firing. Now, of course, Cook's lawyers say that that does not give her an adequate chance to defend herself, but it's something that we're watching closely here because that is one of the statutes under which Cook sued Trump under.
Wow, fascinating readout here, Tyler. Thank you so much. You're spending the day in front of the courthouse. I guess that's a day that's soon to wrap up at the courthouse, indeed, with no ruling. Tyler, thank you so much. That's all the information that we have right now. That is literally the latest. Tyler just brought it to you. She said it faster than you can type it, as this hearing just wrapped as we were coming to air. Spent a lot of time talking about it. I'm glad Tyler got to this. Talking about due process. We went through this yesterday. Having spent time with Peter Navarro this week, he made clear exactly what Tyler was saying. That the angle, the view from the White House and the administration is, you got your due process. We gave you 5 days to respond, and the paperwork speaks for itself. Here's Navarro. Here's what he said.
On the face of it, that's malfeasance. Now, the statute doesn't say the malfeasance has to happen while you're in office in the Fed. It just says malfeasance. This is due process. The president has the power to do exactly what she's doing. Fire her for cause, in this case, malfeasance.
Of course, in the complaint, Cook asked the district court here in Washington to issue the injunction to block the firing, which her lawsuit characterized as unprecedented and illegal. We're lucky to have Greg Stohr with us today, and I say lucky because not only is Greg the best Supreme Court reporter in the nation, and that's where this could end, but has a good sense more broadly of what the administration is up to right now. In the few moments that we have, Greg, thank you for joining us. Having spent time today trying to define cause tells you what about this case?
Well, it certainly tells you that there's not a whole lot of a track record to figure out exactly what cause is and what the standards are that either the district judge or ultimately perhaps the Supreme Court should apply in this sort of case. And so a big question may end up being just how deferential the courts are going to be to the president in making that determination.
Will they be compelled to move this along quickly? It's unclear exactly how much time lawyers will have to come back with more information.
Well, you can certainly imagine that one side or the other is going to want to move it along quickly. As long as Lisa Cook is in the job, you would imagine the Trump administration is going to want to keep pushing this along. If she is either temporarily put out of the job, then she's going to want to move it more quickly to get reinstated.
So, Greg, do you believe the conventional wisdom that this will end up in the Supreme Court? This is your wheelhouse. Is it coming?
Yeah, like pretty much everything right now, almost certainly. I mean, of course, one side could back down, no indication of that now. But yes, all these matters seem to be, at least the most important ones, seem to be going up to the Supreme Court, especially a case like this where it is a novel question and the correct answer is not going to be obvious to a lower court.
Well, that's interesting because we thought we kind of had a sense of what the court thought with Trump versus Wilcox. To what extent will that inform their decision on this?
Yeah, that's a really good question. So that's the case involving whether the president can fire a head of an independent agency for no reason at all, just because they're a Democrat, for example. The Supreme Court in that case let Trump fire members of the NLRB and MSPB, two other agencies, but went out of its way to say, hey, the Fed is different. We're not saying the president can fire a Fed governor for any reason. Now, of course, the legal issues here are different. This is not for any reason. This is because of the alleged mortgage fraud. And so kind of a big question in this case for the Supreme Court is whether that instinct we saw in that Wilcox case to shield the Fed, to protect its independence, is going to apply in this other context.
Mm-hmm. Just lastly, Greg, the idea of a third mortgage application explained away as a clerical error. If there are in fact 3 mortgage applications that the White House now has flagged that we're talking about potentially equaling fraud, how much more difficult will it be for Abby Lowell to make the case that this was just a simple screw up?
Well, as a factual matter, sure, it's harder to make that case. Lisa Cook has not factually rebutted the allegations. We don't know what she's going to say. There was a little, suggestion that it was a clerical error, but she didn't say it. Abby Lowell didn't say that directly. But keep in mind, there's also the court of public opinion. To the extent she's able to say the president is wrong, I didn't do anything wrong, here's why, that certainly helps her case in terms of this very public standoff. And ultimately, that may be something that, is in the back of the Supreme Court's mind if and when the case gets up there.
Really something. This is why he's the best. Greg Stohr, we thank you so much. Greg's going to be doing a lot of reporting on this, it seems, sooner than later. Bloomberg Supreme Court reporter with us live here on the Friday edition. Glad you're with us. Stay right where you are. We're going to turn to the markets in gold next with tariffs hanging over Wall Street. This is Bloomberg.
Please go to my store, the-studio-reykjavik.com, and get the nattokinase. Nattokinase is fibrinolytic. It's going to help to bring down your LDL levels and increase your HDL levels. Super important for cardiovascular health. Another stack for cardiovascular health is the vitamin K2 and D3. Taking them together is going to help to pull some of the calcium out of plaque formation and prevent further calcium depositing. So that's going to help with the cardiovascular system, but it will also help with your bone density. By taking D3 and K2, taking in calcium as a supplement or drinking milk, and doing resistance training is going to allow your body to create a microenvironment that produces more osteoblasts and allows for bone matrix to be built up. So over time, you're actually building denser bone. Super important. So please go to my store, the-studio-reykjavik.com. Get the K2, the D3, and the nattokinase. A great stack for your cardiovascular health. And when you're doing your resistance training, it's going to help with bone density. All right, let's listen into GB News here.
That was absolutely amazing. This is cool. This is so cool.
Hello again, my name is Neil Oliver, and this is GB News Originals. These are dangerous days for all of us. Temperatures have been stoked so high in Britain and Europe that revolutionary fire might break out in any one of numerous places. The kindling has been carefully piled around the people. Fire, as we know, is a good servant but a bad master, and once it takes hold, fire does what it does. Across the West, populations have been divided among themselves by cynical globalist policies designed to undermine and undo nation states, uncontrolled mass immigration being not the least of it. The anger is built up like a charge in a building storm cloud, or dry kindling in a forest ready to be ignited by whoever stands to gain from a world reduced to ashes. Ordinary people may get burned, they always do, but so too might any of their so-called leaders. History has examples of leaders of both notionally left and notionally right-wing ideologies being consumed. Mussolini of Italy was brutally killed alongside his lover, and their bodies hung by the heels from the frontage of a filling station. More recently, Ceausescu of Romania was shot by a firing squad of his own forces alongside his wife. A fascist and a communist. But isms make no difference and offer no shield when the temperature is high enough and someone somewhere has decided it's time for a change. Not change of direction, just a change of faces. Mussolini and Ceausescu led cults of personality, making themselves the focus of ideology. But in the West, by contrast, we have leaders of the cult of no personality, for whom life has no apparent meaning beyond the last soundbite. A lifetime ago, so-called leaders at least seemed to stand for something, seemed to believe in something. For whatever reason, that's no longer the case. And so we have sock puppets, little men and little women, little in terms of character and credibility, and broadly loathed at home. Now we have the likes of Starmer of Britain, Macron of France, Merz of Germany, von der Leyen of the EU Commission, who demonstrably believe in nothing, or at least in no more than endless war and by its prosecution, saving their own skins. Here in Britain, we have two-dimensional figures that live high on the hog while overseeing and enforcing the impoverishment of hard-working people. Deputy Prime Minister Angela Rayner buys a luxury pad in Brighton, her third property, for the better part of £1 million, while overseeing policies that crucify owners of second homes. We've just had the spectacle of what former politician and podcaster George Galloway called the Seven Dwarves in Washington. Zelensky of Ukraine, Starmer, Macron, Merz, Maloney, von der Leyen, the usual suspects all in town. As far as I'm concerned, to beg President Trump to keep the Ukraine war going at all costs, the horrific human cost included. By now, the figure I hear for the death toll is 1.7 million. But I say that the Euro weenies need the war as their only lifeline.
Hello, I'm Bev Turner. Now, it can feel like the money in our bank accounts at the moment does not keep up with the cost of living. And maybe there's...
Yeah, they throw in an advertisement right in the middle of the GB News. I hate this gold advertisement. If gold is so precious, why would they be selling it? You ever wonder that? Because it's a scam.
Already begun to happen. Trump and Russia's Putin may have agreed an end to the Charnel House. To get down to brass tacks, and the brass that's made wherever there's muck, Trump and Putin are rumoured to have agreed, among other things, that Russia's frozen assets of $350 billion may be invested in the US. The reality of the truth of the relationship between the US and Britain, between the US and Western Europe, must be faced. Since the end of World War II, Brits have been encouraged to think of a special relationship with the US. Europe's enthusiasm for NATO has, since at least the fall of the wall, been all about their dad being bigger than anyone else's, and more importantly, with deeper pockets. Britain and Europe have been happy to hold the big guy's coat while he has gone about telling everyone in the world how it's going to be. That time has passed. There are new sheriffs in town. The parts of the world where most people live have emerged as having little need of the West, especially a West that keeps bombing left, right and centre and forcing regime change, weaponising its currency along the way. Now there's the BRICS bloc, Brazil, Russia, India, China, South Africa and many more besides, certainly Iran. Back in the West, the time for the holding of the big guy's coat is likely over. It's hardly about Trump, hardly his fault. The relationship was a one-way street long ago, certainly by the time of Obama and Biden, and probably long before. Turns out, to put it in relationship terms, the US just wasn't that into us. Rumour has it that when it came to talks in Washington about the future, Trump sent Ursula von der Leyen out of the room. All of them revealed their own irrelevance anyway, their own craven, amoral, empty natures. Germany's Merz was still banging on about a ceasefire in Ukraine that everyone, even Merz, knows will never happen. Von der Leyen talked about the necessity to fight on in Ukraine for the sake of abducted children. This is the desperate grab for the moral high ground as the only policy when you have nothing meaningful whatever to say about what matters, like the security architecture for the future of the continent, about how to have vibrant economies that aren't propped up only by perpetual war. Minus the Nord Stream pipeline, Germany, once the industrial powerhouse of Europe, is on her knees. France has run out of colonies to suck from. Britain has Ed Miliband building windmills, while the Prime Minister, backed by men in uniform, talk about fighting Russia. It's the same move that was played when...
On Roku, every journey starts right here. Go Roku home screen. Every streamer shows up here before they can hop into an app.
It's the same move that was played when the US pulled out of Afghanistan, and the cry from the West was about the plight of women and girls who would be denied access to education. This after 20 years of NATO occupation, during which perhaps half the population of the children suffered malnutrition and stunted futures as a result. The elephant in the room for the Euroweenies, of course, is the frozen Russian assets. The 350 billion worth of Russian funds held hostage in Brussels, London, France. If the rumours of the deal between Trump and Putin are to be believed, then those European countries sitting on those billions will be ordered by the US to hand them back. And this may or may not be difficult and or uncomfortable for those holding the funds. As long as the war kept going, and perhaps if Russia had been defeated, well, there was a payday to look forward to. War's good business if you're winning, not so much when you lose. Call what happened in Ukraine anything you want, but the US and NATO lost. But if peace breaks out and that money comes due, then what? As I say, in my opinion, these are dangerous days for those who have been in the spotlight. Commenting on so much that may be revealed in days ahead is sage and experienced former high-ranking soldier and former White House advisor, Colonel Douglas Macgregor, talking about Zelensky.
What happens when all of the mass graves are opened in Ukrainian territory that were filled with dead Ukrainian soldiers that were never returned to their families? What happens when mass graves full of non-military people, Russians that were killed, Russian civilians who were lined up and murdered? Go back to the first atrocity of significance, which was Bucha, back at the beginning of the war, and the attempts to blame the Russians for it when it was never Russian, it was always Ukrainian. What I'm saying is that this man is presiding over more than just the average organized crime state. This man is in charge of a criminal enterprise that has murdered countless numbers of people. He has also participated directly or indirectly with his government in the child trafficking, the trafficking of women, the use of drugs, the reselling of equipment to the drug cartels in Latin America, the reselling of equipment to terrorists in various parts of North Africa, the Middle East, and Africa, Central Africa. In other words, this man is very dirty in every sense of the word. He's not just standing in the shade, as we used to say. This man is dirty in the worst possible way, sitting on who knows how many hundreds of millions, maybe billions of dollars that have been pilfered and stolen from the American people and Europe, but primarily us, in banks all over the world. This is someone who should be tried in an international court of law. And sadly, we're complicit, but we can exonerate ourselves if we end it and get out of it. But he's very much complicit in all this criminal activity. So I think that's in the back of his mind. Is he going to survive at his little villa and vineyards in Italy? Is he going to survive at his private home in southern Florida on the Gulf? Is he going to survive at his other private home in Israel or something else? I don't think so. I think he's going to be chased for as long as he is alive, and ultimately somebody will get him, and it may well be his own people, especially as they discover just how corrupt he and his friends are.
Hard to listen to for those still listening to the litany about the fight in Ukraine being about the fight for democracy, far less missing children. Countries of Western Europe, Britain included, staked everything on the US defeating Russia. That didn't happen, and now the jig is up. Chickens will come home to roost. I see and hear talk of a second front in the Balkans, a way to keep the war going. By their own estimate, the countries of Europe invested in Ukraine will not be in a position to help in real terms until perhaps as late as 2029. Until then, the hope must be sustained war, it being easier to keep an old war going than pause and start a new one later. So, a second front, anyone? Serbs are being set against Croats. Croats are being set against Bosnian Muslims. Bosnian Muslims are being set against Croats. All it takes is an atrocity, a spark. In all of these countries, Britain has NGOs. Just saying. Of course, with an eye to history, the Balkans have been used before. The assassination of Archduke Franz Ferdinand in Sarajevo, the capital of the then Austro-Hungarian province of Bosnia-Herzegovina, against a complicated web of mutual alliances involving the great powers, sparked World War I. It hardly takes a great leap of imagination to contemplate that what worked before to get a World War going could work again. It's no conspiracy theory to hold the opinion that the unpopular at home leaders of the countries of Western Europe have everything to lose if the war ends and Russia and the US find a way to move forward. If you play with matches while standing in a barrel of petrol, well, let's just say someone doing so might get more than their fingers burned. Our leaders disgrace themselves and in so doing humiliate their peoples. There comes a day when those peoples have had enough. And at the end of the day, no one, no regime, regardless of totalitarian fantasies, dismissive and contemptuous of its people, no one is fireproof. Thanks for watching GB News Originals. I'm Neil Oliver. If you enjoyed this...
This is what I've been saying. Think about what the title is. Craven Creatures. Starmer and Macron torched as Britain risks Balkan War. And I said that you have to pay attention to what's going on with the Federal Reserve, the central banks, the Bank of England, the ECB. All right? They have a lot of toxic assets. They have a lot of quantitative easing on their balance sheet. And they need to sell it into the market. That's called quantitative tightening. The problem is that you have France and you have England and Germany with very high debt. That means their bond market has, their bond yield curves are elevated. So when they revolve the debt or issue new debt, they're paying more interest. If their central banks start to titrate into the market quantitative tightening, if they start to sell these assets off of their balance sheet and into the market, it's going to raise the price. It's going to raise the actual yield and lower the price of the actual assets. Why? Because there's more supply. If the demand is basically the same, there's more supply, don't you think the price goes down? Well, if the price of a bond goes down, the yields go up. They have to have a war to prevent quantitative tightening. They have to. This is a foregone, they have to have this. And this is the reason why there's never peace on the Eastern Front. Now, the issue that I have with Oliver is that he didn't have to read it. He wrote an article and read it. Why don't you just turn on the damn camera and just talk like a human being? No, I've got to read it off of a sheet of paper and, it's really simple. Just be a little bit, have some knowledge of the subject matter and start talking. Please go to my store, the-studio-reykjavik.com. Get the Boomer Boost. It has 68 nutrients. It has a very comprehensive compound profile that's shown on the screen. Read the label on my website, and what you're going to notice is when you take this, your body is healing. How? Well, Boomer Boost focuses on multiple systems. It focuses on your heart and your vascular system. It helps with the brain function, your musculature, boosts up energy levels, and revs up metabolism. It's a great way to lose weight. If you're already at your target BMI, you still should be taking Boomer Boost. And you just maintain your calorie intake. But for ones that want to lose weight, take the Boomer Boost and mix it with soft foods, and either breakfast or for lunch, and that is your meal. And then you do the calorie restriction to try to lose weight safely. But if you're already at your target BMI, then just mix Boomer Boost in milk or in a smoothie and just take your normal calorie intake. But this will help you maintain energy levels. And what you'll also notice is that you're going to have more vitality. You're going to be moving around more. You're going to actually be more energetic. And when you're more energetic, you just have a better life instead of being so just in a malaise. You're going to also notice that you're going to be able to think better. You're going to be able to consolidate memory. You're going to be able to sleep better. So please go to my store, the-studio-reykjavik.com. Get the Boomer Boost. You can stack this multiple ways. This is the fourth pillar of my core protocol. The foundation is a probiotic and a multivitamin. The first pillar is the Max 35, Max 14 or cleanse to boost up the immune system. C60 is the second pillar to soak up free radicals. The third pillar, turmeric, ashwagandha, and lignans, boost up the immune system and improve your cardiovascular system. And Boomer Boost to rev up the metabolism and increase your energy levels. So please go to my store, the-studio-reykjavik.com. Use discount 5, you get $5 off any order. If you spend $100 or more, you get a free gift until supplies last. Balkans, I'm telling you, that's where the big thing is. All right, let's listen into Jared Bernstein. He's on CNBC.
I couldn't afford a team, but I built one anyway. Look, I used to be that founder doing everything. Sales calls at 7 a.m., customer support at midnight, social media whenever I remember.
Joining us with his takeaways this morning from the data, Jared Bernstein, chair of the Council of Economic Advisors under the Biden administration. Jared, happy Friday. It's good to see you again.
You as well. Great to be here.
I guess, what, is sticky the word of the day, given the data on inflation?
That's certainly a word I use to describe especially core inflation, 2.9% year over year.
Let's just remember, when asked how the Federal Reserve works and how money's made, he didn't know. Real important economist, working under the, was it the Biden administration? Yeah. Chief economist and economic advisor to Vice President Biden. So he was under the Obama administration, but he was tied to Biden, but under the Obama administration. But you know what's amazing with this guy? Is that he didn't understand how money was made. He didn't understand the mechanism of what the Federal Reserve does to make money. He didn't understand it. He didn't understand the front of the curve. He didn't understand quantitative easing, quantitative tightening, and how it affects the rear of the curve. He didn't understand that bond issuance from the Treasury Department. It's amazing how these people can elevate to such a high level and screw up the economy because they really don't know what they're doing. But they go to really prestigious schools. They know really prestigious people. But when asked a simple question, how is the Federal Reserve minting money? What's the mechanism? He didn't know. He didn't understand that. He didn't understand that when you buy bonds, the Federal Reserve buys bonds and deposits money in the dealer's accounts, that is actually creating money. He didn't get that. He didn't understand that. And when you have someone advising a president and doesn't understand that your policies can be inflationary, don't be surprised you have inflation. We have to, as this pendulum swings towards conservatism, you need to get more educated. You need to get more educated in the sciences. You need to get more educated on history. You need to get more educated on financial markets. So when you are in a place either in academia or at work or in a social setting, and you start hearing liberal bullshit, you can fight back in a calm, logical manner. Because they're used to running the show and roughshotting over everybody else. And they really don't know what they're doing. And if you allow them to continue, they will destroy your wealth. Now, what happened today? PCE came out. It's a measure for inflation and many other indicators in terms of how consumers are spending. All right, so it's a large data set. And PCE is the major indicator for inflation for the Federal Reserve. There are other indicators of inflation, like PCI and PPI. But this is the key one for the Federal Reserve. Now, there's a headline number that includes energy and food, and then there is a core PCE. Now, the headline was at 2.6. The core was 2.9%. Federal Reserve target is 2%, plus or minus something. The headline, 2.6. So close, little bit more than 2%, but getting close to that 2% target. When you take out energy and food, it was at 2.9. So that means that there's a little bit of an elevation of prices of consumer goods and services outside of energy and food. So what does the Fed do? Should they lower rates or should they not? It depends on what happens with the data that comes in next week with labor. If labor's strong, it may be prudent to wait another month to do a quarter point. If labor is weak, then it's prudent to do a quarter point in September. If it's really bad, then they're going to accelerate the cutting, and it might be even 50 basis points. But the probability of that is really low, less than 5% chance. So, with that, let's go back to Jared Bernstein, who doesn't understand how the Federal Reserve actually works. But he is in a position of power, or was, and he's a CEA chair from 2023 to 2025. He was in a position of influence. And you wonder why we had runaway inflation under Biden. We literally have retards running our government.
In fact, inflation, whether it's month over month or year over year, came in exactly as we expected. And it's always good to see the numbers tracking expectations. You don't like to be surprised. But the fact is that the core rate in particular has...
Think about how ridiculous that is. All right? It depends on the context. If your expectation that inflation's at 7%, and it comes at 7%, you don't jump up for joy. Because it's too damn high. See the point I'm making with nuance? It's about context. Now, it was at 2.6. It came in at 2.6 for the headline PCE. So that's good. But if your expectation was 5 and it came in at 5, is that good? Well, no, it's not good because when you go to the store and you need something, it's a lot more expensive. So it's about the context. It's not about good or bad.
Above its target for years now, and it's been, to coin perhaps an overused word today, awfully sticky. Another thing I saw getting a bit under the hood is that service inflation.
Oh, really? Why was it above 2%? Why? We had a president called President Biden, and we had poor economic policy that led to an inflationary spike under his administration and an overspending during the COVID years, fiscal spending. So you had fiscal problem and you had monetary stimulus that led to higher inflation. It's people like him and his ilk that caused the problem that we have, that it's sticky.
In July, and that too has been quite sticky, well above 3%, tracking that way for months now. Pre-pandemic, that was coming in around 2%. Now, services aren't directly tied to tariffs, so that's a pressure that's also a source of concern right now.
That was certainly a worry coming out of the CPI print, and I'm sure we'll talk more about it in weeks to come.
Services are going up because, one, they can fly underneath the radar and just, and say, well, this is the cost of the inflation is driving up prices, but really they're trying to get probably a better margin. And there's probably, in certain services, an increase in demand for whatever reason. And because there's an increase in demand, there seems to be some room to raise the price. All right. But the big point here is that it's people like him. And the reason why you're going to the store and things are more expensive. Because we're still feeling the aftershock of the fiscal and monetary stimulus from Lehman, or from COVID. The problem with the Lehman issue is that the central banks can't unravel as fast as they want the quantitative tightening. They want to unravel the quantitative easing and do more quantitative tightening, which means selling stuff into the market. They can't do it because of this inflationary issue. So let's not really talk about tariffs so much because it's only marginal change. It's not the tariffs. The problem is the over stimulus in monetary, the over fiscal stimulus and the over monetary stimulus from the Biden administration. As we are now slowly controlling that inflation, it's now coming back to 2%. But it was elevated to 7 or more, depending on how you want to measure it. Remember, Janet Yellen and Chairman Powell said, it's transitory. Don't worry about it. So we're still feeling those effects of COVID. Now, with Lehman, the bank needs to start selling some of the assets. They need to speed up the quantitative tightening, or at least maintain a steady flow of the quantitative tightening. They can't. They can't because you have the inflation. And because you have inflation, it affects the bond prices. And so they can't sell into the market because when they sell in the market, it's going to raise the price. It's going to raise the yield. Why doesn't someone like, whatever his name is, I forgot his name, on CNBC push back on this and say, dude, you are part of the problem. one, you don't even understand how money is made. But second, this over stimulus that took place during the COVID years and during the Lehman years is affecting us. There's a perniciousness because of stupidity.
Of course, market's really more interested maybe in the labor data that's headed our way next week. And I think you probably see some vulnerabilities in the labor market.
Yeah, I've written that the job market is showing cracks. Now that's hard to see, harder than we'd like to see right now because kind of the signal to noise ratio is dampened by a lot of fog. Particularly on the labor supply side, we know that immigration is way down, but it's hard to track that in real time. That said, there are enough indicators, Chair Powell himself mentioned this in his Jackson Hole speech, enough indicators of a slowing job market to generate concern. And I think given today's inflation report, the fact that we're coming in at expectations, the fact that the Fed has repeatedly said that they could look through the tariffs,
it's not about expectations, because if expectations were 5% and it came in at 5%, do you think the Federal Reserve would lower rates? Of course not. So it's not about expectations. It's about that it's coming in closer to 2%. Let's get a little bit more specific on the details, Jared.
One-time kind of event, the softening of the job market gets the extra weight here, and that leads to a September rate cut.
And then
if the job market, if the jobs data is weak next week, it increases the high probability, 80%, 85% chance that there's going to be a 25 basis point cut by the Federal Reserve in September. The question is do we really have a softening job market? No one will know until it comes out.
Toll on consumer sentiment when people don't have jobs, but they don't spend. They don't think that they should be spending. And there's pullback there. How healthy do you think the U.S. consumer is?
Well, you ask a timely question because we also got information this morning from the Michigan Sentiment Survey, which showed a pretty significant tick down in consumer.
PCE data showed that consumer spending was up, not down. University of Michigan data that came out said that the sentiment was going down, but inflation expectations also went down. So the question is, really, is UMich data just noise?
Sentiment. Those numbers jump around from month to month, but I'd say you're very much correct to.
When you look at data that jumps a lot month to month, and there's some noise, you have to average it because you have to smooth out that noise. So what is really happening here? What's really happening? Inflation does seem to be drifting down. Job market seems to be in potentially stalling. But unemployment rate's really low. 4.2, 4.3. That's low. Maybe people have a negative outlook because of the media, not because of reality. Now, what's really weird about social systems is that if your belief is so strong, you can affect reality because consumer behavior will change. If it's positive in your belief, then there's this feedback that will lead to more growth. But if you're negative with your belief in the economy, and more people believe that negative belief, they'll spend less and the economy starts to falter.
Suggest that we look at the actual spending data because that's not so much you know, how do you feel? That's what you're doing. And in fact, we got a decent pop in real consumer spending. I think it was up 0.3 in this morning's report. That's real. But if you look for the course of the year,
finally he admits to that.
Consumer spending is up at a 0.5% rate annualized. That's December through July, 0.5%. That's not a great number for real consumer spending. So yeah, I think the American consumer is a bit spooked, and I think tariffs, chaos, deportation, all the uncertainty, the harassment of the Federal Reserve, the Lisa Cook firing, all of that weighs on consumer sentiment.
Let me get this straight. You're going to go to the grocery store or Walmart, get some goods, right? Do you think you will change your spending behavior because of Lisa Cook? Really? Will you stop spending because maybe the Federal Reserve's independence is at risk? You're going to stop that. You're going to stop purchasing that house. You're going to stop purchasing that car. You're going to stop buying tomatoes at your grocery store because you are really worried about the court hearing of Lisa Cook.
Jared, I had mentioned a couple weeks ago, a report came out from Swiss Re Institute that warned that the U.S. was losing its status as a safe haven and that international investors would likely start demanding a premium to hold U.S. assets. Do you think that the additional moves that we've seen against the Fed independence, could heighten that?
Now, you really think that's going to happen when you have France having a debt crisis, Germany having a debt crisis, China's economy is in the shitter, and England is having a major problem, and they're calling it the doom loop? Who's the cleanest shirt in the laundry basket? The United States. Don't bet against the United States. Trust me on this. But let's listen to Jared, who doesn't know how money's made at the Federal Reserve.
I very much do, and I think what you're mentioning, the Fed...
He's totally not paying attention to what's going over the pond. Europe is a canary in the coal mine. Big problem. Big problem. So if you're an international investor and you took the advice of these economists in April and you told your clients that you're managing money for to move the assets to Europe, do you think that that was a good move now? Or do you think it was better to listen to Dr. Paul Cottrell and actually buy more U.S. equities in April? Who did better? The ones that listen to Dr. Paul Cottrell and not Jared Bernstein or Larry Summers or Rogoff. Almost all the economists were wrong. And they're wrong again because they're not paying attention. They're not that smart. If they were smart, they would have actually had a STEM degree in engineering or in physics or in chemistry. What they do, they got an economics degree.
Is very much a piling on to a set of problems that already existed in the very space you're mentioning. And it's not just that risk premium and interest rates might be coming around the corner, they're here. If you look at the spread between the 30-year Treasury and the 10-year or a shorter term Treasury bill, you'll see that spread has really opened up quite a bit. If you look at the term premium was negative a few years ago. Now it's closing in at a bit.
If you've been paying attention to my market analysis, when I go over the different charts, I usually do it weekly or every other week. I've been showing you the gap, the spread between the 30 and the 10. year yield. And also overlay it on when the Federal Reserve lowers rates. The Federal Reserve is going to lower rates. When the Federal Reserve lowers rates, usually the spread comes in. But what's even more important is paying attention to what's the spread between UK 30-year and US 30-year, or UK 20-year and US 20-year. Who has higher yields and why? And that dynamic, paying attention to that dynamic, then you start paying attention that there is an international economic problem starting to arise. Now, at the surface, it's poor fiscal management at the government level, and they're issuing too many bonds, and there's an overabundance of debt. But when you have economies like the UK, that's not as robust as the United States, they're teetering on default. So where's the FDI, the foreign direct investment, going to go? Do you think it's going to go to the UK, or do you think it's going to go to the United States? And if it goes to the United States, it's going to go into equities and it's going to go into treasuries. And when it goes into treasuries, when there's FDI coming in and it's going into treasuries, what happens with the bond yield? It goes down. This guy's a dipshit. He's stating facts but can't connect the dots.
1%. So we're already seeing the kinds of risk premium pressures on interest rates where creditors are suggesting that they need a bit more if they're going to invest in an economy where you have the president such a meddler, not just in the Federal Reserve, but in private industry itself. If you look at that equity take on.
It must be Trump's fault that the reason why the equities are going, that the interest rates are going up. But wait a minute. We were zero bound. And then eventually we started to go up. Now, why were we at zero bound? It was called Lehman. You can't stay at zero bound. You need a shock absorber. Would you drive your car on a road without a shock absorber? Well, there needs to be a buffer for the federal funds rate at the Federal Reserve to be able to cushion shocks of the market. So they have to bring up the price. So yield, the federal funds rate has been at zero bound for too damn long. So bond yields have been way below their 10 or 15 year average. So it's mean reverting back to a normal level. This is also the reason why the dollar is starting to go down, because it was at an elevated level, way above its 10-year average. We are literally moving out slowly out of the Lehman crisis. It's taken this long to do it. But it's all Trump's fault. It's all Trump's fault. This guy's a dipshit. He's a dipshit. Dipshit.
Equity share take on Intel. So I think you're onto something important, and to me it looks like it's going to get worse before it gets better. We haven't even talked about the fiscal outlook, which is also problematic from a longer-term interest rate perspective.
We're Phoenix Energy, a family-owned oil company focused on unleashing American oil from North Dakota.
So basically, the implicitness of what he's saying is that we should stay at zero bound and not have a shock absorber for the Federal Reserve. Just keep on printing money. Just keep on staying at a low rate. But it's all Trump's fault. Can't be the Republican, or it can't be the Democrat fault. No. It's always Trump's fault. Please go to my store, the-studio-reykjavik.com, and get the collagen. This will help with your skin, your hair, your nails. It'll also help with musculature, bone density, cartilage, joint health. Mix it with soft foods, filtered water, smoothie, or even with milk, but take it every day. This is a month's supply. You can stack it with vitamin C and magnesium. You drink about 64 ounces of filtered water, and it'll cross-link. and help with the dermal layer. You can stack it with the gel that I have. The gel will help with the topical layer for your skin. This will help with the dermal layer. You can stack it with C60 and resveratrol. C60 and resveratrol work together to help with the basal layer of your skin. And that's where you generate new skin cells because you shed them off. But the basal layer produces new ones. Well, if the basal layer is healthy, guess what? Your skin's healthy. So please go to my store, the-studio-reykjavik.com, get the collagen, and don't be a Jared Bernstein. All right? Thank you for listening, and have a nice day.